Good morning, all you beautiful traders out there. Let's see, it's still good morning in the chat here. Let's do that. I'm gonna pop over here into the Discord where all these beautiful people are. And there's a couple of them beautiful people. Let's load up the screen. There we go. What we got cooking here in the charts? Oh yeah. Ooh. The Wolfpack's there. Look out. The wolf pack is here. We also got our little AI friend.
Hello, this is ChatGPT.
Hi, ChatGPT. Hi, Shark Tank. That's right. Who's playing in the Shark Tank with the alpha traders?
Bruh.
Bruh. I mean, what are we doing? Beautiful. Absolutely beautiful. Oh, Jesus. Thank you, God, for this beautiful soundboard. Gotta love it.
I say, it is a prodigious thing indeed.
Yes, sir. Got me laughing. Oh, boy. I'm just scanning over these VRE reads real quick. Yeah, old gold. Gold slid, right? Yeah, it was coming. It's coming. Put a little something into Discord. You know what? Since Bitcoin is chilling right now, I actually went down and tested the weekly wave trend again, I believe. Let's pop this. Pop this on gold real quick. Give gold its own stage for a second. Yeah, this was yesterday right here, right? Get a rejection right off this daily range. Right to the 95 for Laplace. Thank you very much. Yeah, man. Gold's data set now is below all the macro volatility. Let me see something real quick. Yep, there's that weekly. There's that weekly range. So, and that's what it was too, is the bottom of the weekly right there. So, man, to dump out below this monthly range, gold's got its hands full now. I got something to look at here. Let's move this up a bit. Got some support levels down here. Bottom of the weekly range. Bottom of the weekly range. Where are you? Where are you? I'm getting close. Getting close. It's getting ready to pop in. Let's scale this down a little bit and we'll pull up from the bottom. There it is, right there. There's the bottom of the weekly range right here. And I believe, is that the first support level on the monthly? Yep. So you got the first support level on the monthly, and then the bottom of the weekly range, right at 1944, correct? Let's go over here real quick. Throw this on gold, on spot. Let's turn off these RMLRs first, because I want to just see some distribution levels. Current candle on the weekly time frame. Actually, at the daily right there. Yeah, the daily so far is running the 68.3 Laplace, which is good. Okay, here's the weekly. So on the weekly, where did gold dip to? See a little blue dot there? Everybody out there in denial about the algos using the distribution? Right to the first standard deviation, normal distribution. I'm looking down here at the second SD. Look, 1942.4, right? That's literally $2 below the weekly range on gold. We're gonna have to keep an eye on it today, tomorrow. But yeah, this could definitely get down here very easily. Very easily. You know, all the gold bugs out there just think, oh yeah, gold's good. No, gold's not good. And every day people are trading in gold for Bitcoin. So at some point you're going to see a big flipperoo. Big flip in my opinion. But gold has been showing. Let me show you here. Pop up here on the weekly. Okay. Here's the bear div right at the top. Here's the bear div right at the top. Got a couple stabs. Boop, 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 boop. Now you're below the zero mean. Positively correlated on this downturn here. All the weekly fissures are down. You've got low length volatility expanding. It's sloping negatively correlated. You got the 981 contracting, positively correlated, which that is ebb and flow. It fell off a cliff too. Gold's got a move coming real soon. You've got the 2400 expanding, negatively correlated. This weekly time frame, very bearish. Very bearish. You've got reverse Fisher and wave trend going to cross up. Probably, you know what? Let me flip over on the 5-day. There we go. It's a better weekly read. And I imagine we're going to see the same thing in the volatility. Yep, exact same thing. 2400, 525 expanding, negatively correlated. 981 is falling off a cliff, positively correlated. That's usually going to ebb and flow into a nice little dump. Variance is spreading. It's kind of flat, but it is negatively correlated. You've got reverse Fisher and wave trend going to have a little, if it does cross. Gold dumps down here. I mean, look, guys, we're talking under 1900. This is where the wave trend's at, right? We've got some bear div. Could that bring this data set all the way down? If you've been watching these markets long enough, you know it can. Also got some bear div on the Z-score log returns. Got some bear div on the fissures. Okay, from this point all the way back here. And if you notice, you got a higher high from all the way back here. Look at the high of that data set on the returns oscillator. It was above the zero mean. So we got multiple stabs of bear div here. Been talking about it. It's talking about a gold pullback. You know, and of course all the gold bugs are going to be in denial. That's fine. You can be in denial all you want with the VEPS here. These aren't lagging indicators. They tell you what's going to be happening in the markets. Very powerful indeed. But this is the top side of the workflow, right? So you got to just start cruising down through here. Let's see what the 3-day looks like. And I'm looking for something maybe on the 3-day. Let's look for that 1940 area. Wave trend up, still under, wow, still under 1900. Yeah, this thing. So do I think it's going to get, if it does go down to 1900, do I think it's going to do it this week? No, it's below that weekly range. And it's like 50 points, 40 points below that weekly range. Not going to happen. Here we go. Well, we got the reverse wave trend on the 2-day. Blow this up real quick. What do we got? 1930. A little closer. Let's see where this is at in the daily. Ah, boy. Okay. Almost at the reverse wave trend on the daily. This will be the first full test, right? Getting outside the power mean band 3 times here. Now, what do we got down here? 99 log MA. 1924. Yeah, I'm not finding anything right at that 1940 area on the UPM here, which is fine. We're talking. We got Laplace and normal distribution areas though for sure. Let's see, and like I said, it's not going to hit that lower level this week. Let me see here on the 4-hour. This thing is going to be below. Oh, we got cows. Did I hear a cow? or a what's that animal in Star Wars? Let me see. You're way below.
Bill Murray saying bit.
Way below the power mean band on the 4-hour. Okay, let me see here. What's the bottom? Right around 2K. Hey, can this pop up here? Test 2K again? Sure it can. Sure it can. Indeed. Let me see what's going on. Dun, 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 dun. Oof. Oof. You only got the low length contracting negative. The other two are expanding negative. It's going to be tough for gold. It's going to be real tough for gold. See some. Especially when you're not building any bull div. All right, you got lower lows here. Look, this thing's setting up hidden bear. And let's expand this a little bit. Here's the thing. Let me take a quick peek here. Interesting indeed. Tell you what, man. This thing can come back up to the bottom of to test up. Little, probably here in the next 4-hour candle too. It's going to drop right to about 2K. Come up here. This data set can test that 2K region again, and that hidden bear is fully intact. The trend of the downside is starting to lessen a little bit. It's all good. We're talking about a 4-hour. Still got 3 of the 4 fissures down. Man, I mean, right here, right? You get this little crook here. There is a little bull div on the 4 hour that is setting up this hidden bear. So this is going to be interesting to see what happens, especially with the dollar, right? What's going on with the dollar? We're going to jump into it next, and then Bitcoin. Then we're going to perfectly roll right into SPY's open. Speaking of that, let me get up the account. Make sure this account's open. Yep, getting to SPY soon, my friend. Sol Gomez, we're on it, buddy. Actually, I'll go to SPY next. You make sure this brokerage account's open, though. I got to get ready for SPY. Everybody's getting ready for SPY. Here we go. That'll work. Yeah, loads this dashboard every time. Tasty trade. Nice little upgrade. What's that all about? Loading dashboard. I don't need the dashboard. I need the 0 DTE options. There we go. Right when we get the open, I'll throw out the expected move and all that good stuff. So yeah, gold. You can see on the 90-minute, right? Went sideways, mean reverted, right in back into the power mean band stuff. Gold. What are we setting up here? Yeah, little bull div, right? Not a little. I mean, on the 90-minute had quite a bit, but look, you're bouncing off the zero mean. You're negatively correlated. All the fishers are up, but boy, they look weak. They look weak. The predictors to the downside going back into a random walk. Flat volatility on the low length, positively correlated. That'll walk it right down. 981 contracting, positively correlated. 2400 is contracting, and it's positively correlated as well. Boy, oh boy, is this thing going to reject? It could, man. It could reject. That 4 hour doesn't have to go back up and test that wave trend or the bottom side of the power mean band right now. It just doesn't have to do it. But I'm seeing bull div on these low time frames. I mean, a lot of it, right? Here on the 45, you're positively correlated, getting ready to cross, or you're crossing the zero mean, positively correlated. Is that going to roll up into the 90-minute? Possibly. Possibly. But if you've been watching us for a while, what am I doing right now? I'm running my workflow, right? Doesn't matter what asset we're on. I'm running a workflow to get my intraday bias, right? That's what you're doing here. Let's see. Yeah, this thing's probably going to rebound a little bit. I mean, it's already trying. It's already trying. And then you get down here on that. Wait a minute. Let me go back to 33. Let me see this real quick. Yeah, man. Boy, you had this bull div, but it's just not moving. It's not moving down here, right? You're rejecting off the 33 power mean. That is never good. That shows a lot of weakness right there. I mean, obviously you're mean reverting. And here's the 15-minute. Just test it up on the wave trend here. Thing's still bearish. It looks like you got wave trends going to reject off Fisher. These are reverse, right? Reverse Fisher, reverse wave trend. These are great indicators, by the way. Very great. Volatility's totally expanded down here on the 15 too, right? It was positively correlated, right? So if you were in a little scalp on the 15-minute at the top side, that peaked out right when you were getting up by the wave trend. That's why all this works together, man. It's literally screaming at you when to take profits. That's why we love these indicators. There's nothing better out there for profit taking, right? You throw the distribution in and all those volatility ranges, man, dude, you're unbeatable. You're unbeatable. Why do I say that? Well, because we prove it every day. We prove it every day. Let's see. But obviously, you got to follow the 3 tenets of Apple trading, right? We always take our profits often and early, right? We limit our losses, and we're never emotionally attached to these trades at all. If you're emotionally attached to this, yo.
Quick question, and I don't mean to go off subject on this tasty trade. How do you get off the dashboard?
Just X out of it. Go up dashboard, just boop.
Yeah, but there's no. It just opened right to it. That's so weird. Okay.
Yeah. I know. For some reason they pop up the dashboard for you now.
The bull. Okay, I got it. I'm sorry.
No, it's fine. Yeah, you just erase it. Boop, hit the little red X.
Hello, this is ChatGPT.
You know how you get rid of those porn tabs? You just go up to the boom, hit the little red X.
Watch your profanity.
I'm just messing with you.
Welcome, see, man. Glad to see you show up, man.
Nice, beautiful. Okay, so gold. Yeah, that's enough on gold. I just want to show you, this thing is bearish, man. Gold is very bearish. Been talking about it for weeks, though. I had a couple comments. I had somebody DM me, and they're like, nah, DM me on Twitter. And they're like, nah, gold's out there. I'm like, okay, buddy. All righty. Good luck. Oh, gold's on a bull run. Yeah, we'll see what the bears have to say about that. Plus, what are you? No. Is that your pick of sound money? Because I got a newsflash for you. Gold is not sound money. At one time, maybe. One time, maybe. You know what? Let's fly over to SPY real quick. Let me see something. Think about SPY. We can see SPY, but we need a market open, man. We need a market open. Let me see how this did close. I know we had a dump out right at the end, right into no man's land. But look, pre-market. We've been talking about this. Okay, look at the volatility in SPY. Right? Why? Why is SPY doing this? Look, this red cross line up here, that's the top of the monthly volatility range, right? Here's the bottom of the monthly volatility range. Now, I'm not talking about the supports and resistances that go along this code populates, right? No, here's the center, and just think of this as the wings, right? So these are the wings of the center of the monthly volatility range, guys. You've got the weekly inside of it. Look at the last 2 weeks. We're seeing this volatility. This is a magnet. This is a straight magnet right here for price action. Unless this data set, and from what I'm seeing, man, oh man, not only are you going to have to get by like a monthly, I'm thinking like second support level, second resistance level, either to the top or bottom, to get away from this area, or you are going to be requiring this the rest of the month. You just are. You can see it happening right now. I mean, the proof's in the pudding right here. This is exactly what's going on. Now look, pre-market, right? Everybody's like, oh, SPY's bearish, oh, it's dumping. Guys, look at the pre-market move, right? A couple points. Yeah, almost a couple points up. So where's the new daily range going to be on SPY? Now let's see where we opened up. Remember what happened, right? We gap down yesterday right into this weekly, and I sat on my hands. Why? Because this thing could have went any direction. This was a tough day yesterday, right? You must unlearn what you have learned. Oh yes. So let's see here. Where's the new daily gonna be? Yeah, here's the thing. So you close down here, you're going to get a new daily range in this area. You gapped right up through it. So does that new daily range does the data set need to test that? No, it doesn't. It doesn't at all. So we're going to have to wait until this opens up. Let me see something here. How'd this baby close? I'm just going to do a quick 4 hour and down. Interesting. Yeah, pretty clean charts. Look at the 4 hour. 4 hour came back down at the end of the day, tested the reverse wave trend, the white dotted line right there. Bammo. Not surprised at all. Pre-market, this thing's up towards the top side of the power mean band. All right, 412.39. Interesting. And it was up there a little bit ago. It did just pull back. Yeah, that's not giving me. Let me go down here, 90 minute. Let's see where this baby's at. And like when we get this market open, we'll be able to get this daily expected move, where the first standard deviations are going to be at, all that good info. Yeah, boy, this is a mess. This is what the tight monthly, weekly volatility ranges will do to a data set, man. You can see it. You can plainly see this. Good luck, people. Good luck if you're out there trading these markets. If you're trying to swing trade this stuff, good luck. That's why we use the VEPS. Let's see here. Wow.
Got to explain what that is, if you mind, for Matt.
Explain what is. What?
Like the VEPS, like what, volatility.
Yeah, just volatility, entropy, probability, and statistics. It's like all of our indicators here are built on one of them, right? Which, so when you take the returns into account, price action follows returns. So, and I got to add that in too, and that's part of the statistics, right? So when you're working with the VEPS, you're not working with lagging indicators, because a lot of these, they're built upon the distribution, they're built upon the returns. And so when you're looking at these indicators, they're letting you know what the returns are doing. And when you correlate these indicators, like we have on our returns oscillator, it's going to let you know, hey, is price action following? Look look yesterday, right? What was it setting up right at the end of the day? It was setting up hidden bear, right? Low, higher high, right? Higher highs right here, higher lows, or lower highs, my bad. And then right, as soon as it crosses a zero mean towards the end of the day, positive correlation, bam, it just dumps out. Nice little late day scalp. I wasn't interested in this. But we knew, I mean, you look at the VEPS, you knew this was coming at some point. You know, was it going to happen by close? We'll have to go down lower here. But yeah, look, it ended on an outlier on the 45-minute too. Outlier to the downside. Look at the volatility. All the volatility started expanding, negatively correlated. Power move. All of it was a random walk too. No trend at all. Let me see here. Down here. Yeah, and there you get down to the 33. That volatility was expanded all the way close to 100 percentile. Got all the lengths. So you got the 45 and the 33. Man, oh man, surprise! I'll tell you what, it's that monthly volatility range, man. It's that monthly and those weekly volatility ranges that's got this pre-market up like this because the volatility is saying no, no, no. Am I going to be looking at some puts this morning? Possibly, man. Possibly. There's something going on here. Yeah, look at all this hidden on the 15 right before close. This was setting up. Previous, you started right before the big 15-minute candle dump there at the end. You started having an outlier, right? And this is our coefficient of variation, right? This is just a variance indicator. One of the simplest indicators we have and gives you a ton of information on what's going on. Variance is a spread of data around the mean, right? So when you correlate variance to price action, it gives you direction. We've also got built in where it's going to tell you when there's an outlier happening, and an outlier within the distribution is a fat tail event. Fat tail event is a 95.4% probability move or greater. Now that doesn't mean there's a 95.4% chance that move is going to happen. It means that as that outlier is proceeding, there's a 95.4% chance that it's not going to exceed that level. Wherever that 95.4% probability level is within the data set, that it's not going to exceed it. And that there's only a 4.6% probability that it will. That's why these probabilities are very powerful. And when you get above that 95.4% probability level, next one, you got 99.7. Unless you're going to throw in all the coin flips, which is a whole nother ball game. Which is very interesting. They're very powerful too. But you get up around there, and these are places like great places to take profit. And I'm talking about each time frame has a current candle, correct? Each one of those current candles has distribution levels, has probability percentile levels, whether it be Laplace distribution or normal distribution. That's the two distribution models we work with right now. There's some others out there, but fitting what we do, they don't fit. I mean, there's one in particular we've been trying to see if there's something to it, probably because it just looks cool, right? Probably because it just looks cool, but there's really nothing to it. I mean, and you can plainly see the algos. The algos are running these two distributions. They have been. Let's see here. Now, Laplace came on probably, from what we've seen, maybe 5 years ago at the earliest, maybe not even that much. All right. It could be 3 to 5 years. Normal distribution, been using it for a long time. Remember when you were sitting back in high school and they were talking about the bell curve and normal distribution or whatever, and you're like, when the hell am I ever going to use this? This is nonsense, blah, blah, blah. Well, here you go. This is where you're going to use it. Now, a lot of people out there use the bell curve, but this brings, I mean, the full power of it into full effect, really does, man. It is a powerful way to trade. So yeah, we'll get to the open in 7 minutes. It's all good. We're going to pop back on here when it opens. And then I'm going to give out all the reads. Let me see something. Let me pop over for about 5 minutes. Let's go to the Bitcoin index. Yeah, we're getting this pop here on the 15. Yeah. Let me see here. Yeah, the bull div was on the Z-score, right? Sometimes you're going to get bull div also. Bull div on the Fishers and the Z-score. Was it on the returns oscillator? No, got a lower low, right? Got a lower low. But what's happening right now? You're building a higher high on the returns oscillator from this data set right here. So it is setting up hidden bull, but there's no top on this data set yet. Right? If it runs up to reverse wave trend, say bye to that div. Now that would turn into some weak bear. I don't really play the weak divergences though. I just play the hidden, right? The continuation divergences, the trend, the regular div, the trend changing. That's what I'm looking for. And you got all the fissures up here on the 15 too. Going right into market open. Interesting. What's BTC going to do here? I mean, pretty much, yeah, look at this. So you've got the low length volatility. It's down to an 8 percentile from fully expanded within about an hour of candles, right? That's a significant drop. When you see the 981 and the 2400 just hanging up here, guys, get ready. That's all I can say. And to be honest, this 525 contracting like this, negatively correlated, guys, that usually ebb and flows into an expansion, a break in correlation to the top side. What would that do? What would that do? You'd probably slam you right back up here to the reverse wave trend, right? At least a couple $100 move. Going to get you up there close to 27K again, 26.9. Does it break through there? Does it go to the top of the power mean band? It could very easily. But this is what I'm seeing in Bitcoin right now. Especially, look when the returns oscillator turned down. You see how the correlation when the returns were rising? Price action was following, right? Now it's not. And you can see it, right? You've got the returns are coming back down towards the zero mean. This is what returns do. They mean revert. You got the data set rising. This is why there's no correlation, okay? You got all the fissures up too. So looking at good. And the only thing that didn't show this bull div right here was the returns oscillator. Even had it on the DLP. Right now, the entropy is heading back into a random walk. Just lost its trend, right? A nice strong trend. You want to see the bright blue, right? You want to see nice bright blue. And the line here is hooked up to our predictor model, right? So when you start to get a trend, the predictor is going to tell you which way the trend's going. If you understand the volatility, right? Volatility expansion, positively correlated. You can see on the low length, right? The first candle of expansion was still negatively correlated. So you get this quick little 15-minute candle down, then the low length, right? The correlation broke positive. There you go. Then you start moving because all the 981, 2400 were positively correlated. And they were all expanding as well. Beautiful little example of how this works on low time frames. And that's what, you get outside this power mean band like it has. At some point, you're going to retest up here into the meat of it, usually where the reverse wave trend's just sitting there waiting. Okay, let me see here. How BTC open up on the daily? This is, okay, now when we talk about occurrences, all right, this is what we're looking for. When you're a volatility trader, you're looking for occurrences. The more, the better. That's why we trade the low time frames. Look at the occurrence that's happening on the daily. What's this going to tell me about my workflow? This has got me in a little bit of a holding pattern, right? Look at the volatility reads. This thing is crushed. Rush. The 525, or actually the 525's at a 4 percentile. The 981's at a 1.23, and the 2400, which is a very, very high length, at a 5.75. Grades at a 6.86. It's actually got the highest read. Is that a little foreshadow of what's about to happen? Possibly. But look, when all three lengths of volatility are low like this, you have a move coming. You definitely have a move coming. If this was on like the 1 minute, the 3 minute, 6 minute charts, and I'm down there scalping, I'm foaming at the mouth, right? I am ready. Let me go to the 4 hour. Let's see the volatility read here. Interesting. So the 981 and the 2400 are expanding, negatively correlated. Right, the 525, the correlation just broke. So we're getting this 4 hour candle up. You can see when it first started expanding from this, look right where it expands. Correlation broke negative. Down we go. 2 4 hour candles. Pop. As soon as the correlation breaks, 4 hour candle at the top side. Was there bull div? Is there bull div? Yes, there is. Getting ready to cross the zero mean. When this 4 hour closes, this thing's going to cross the zero mean. I mean, unless this 4 hour candle, if this 4 hour candle runs up to like 27,250 area, you'll definitely see this returns oscillator pop its head above that zero mean. Can it stay up there though? Can it stay up there? because yeah, no, you're good. On the top side, it's clean for any bear div. You get a higher high on the returns oscillator here and a rejection like top side the power mean band, even the wave trend. That there you go. There's your hidden bear. Interesting. Now, why do I talk about divergence so much? You're not going to hear other people out there having live streams talk about it so much. Well, they don't talk about it very much because they're using lagging indicators for their divergence, right? Like RSI, Stokes, MACD, all lagging indicators, right? You hear it all the time, but you use them, which doesn't make sense. Look, we're not going to hate on you. You can use whatever you want to trade. If you just follow the 3 rules that we teach, you could teach your pet monkey to throw darts at a dartboard. As long as you limit your losses, take your profits, and you're not emotionally attached to the trades. This is where people are out there teaching trading psychology. Guys, what a scam. What a scam. My book on trading psychology is going to be 400 pages. It's going to look like Bart Simpson's chalkboard, right? I will not be emotionally attached to my trade. I will not be emotionally. That's all. That's all there is. Everything else is fluff. It's bullshit. Emotions are natural. You should show emotions, right? If I take a small little loss, do I get pissed? Yeah, I get pissed. The dogs are like, what's wrong? I don't like losing. But the fact is, I limited the loss. I'm still pissed. I don't let myself get underwater. We know how these data sets are, right? You think you get into a good position, you get it. Say we're talking about Bitcoin. All of a sudden, immediately, you're $100 underwater. You're trading with 1 Bitcoin, right? Say risk is on. The correlation broke, right? Data set went the opposite way. If I'm scalping a 3-minute time frame, if one 3-minute candle closes below or above my entry, whether I'm long or short, I am out of the position. I do not care. Think about that. Think about the power. And you feel better doing that than you do winning a trade. That should make sense to people who've been trading for a long time because it shows that you're sticking to the plan, right? You do have an edge. All these people out there talking about an edge, they don't even know what an edge is. They think an edge is a group of lagging indicators you throw on a chart. Here's my edge. Check it out. That's not it at all. So much more goes into this. So much more goes into it. And once you nail it down, this is a good place to start. We're very friendly here. We love to teach people how to trade the VEPS. Bottom line, we're here for you guys. We're saving one trader at a time from what we believe is an industry-wide scam, right? Traditional technical analysis. Did it have its day at some point? Yeah. I mean, guys, this is why, who are some of the biggest traders out there? They trade options, right? So these options traders, you think they use traditional technical analysis? No. They use implied volatility, most of them, and that's it. And that's why a lot of these indicators are built perfectly to trade options. While they're using just implied volatility, we created this volatility grade. That is implied volatility and historical volatility combined, and we overlay it on volatility percentile. This is when you learn how to read this indicator, if you do subscribe to our package at some point, after you get the free chart, right, to learn the basics of volatility, then you get our free trial of the indicators you're seeing right here. Yeah, you will start to see it. You will. Especially if you've been trading for a long time, right? Especially if you've been trading for a long time, you're going to see the difference. And like right now on 4 hour, the low read volatility is at 76. Grade's chasing it down. When this low length volatility, when you have these little explosive volatile moves, and that low length peaks out at 100 percentile, and then grade, which is historical and implied volatility, peaks out with it, the indicator is screaming at you to take your profit, right? Boom, done. That's what this does the best. Because volatility only does 2 things. It expands and it contracts. And it's all about the breaks in correlation that go along with it. And there's 6 different scenarios. You can come into the Discord and check out what those are. But I talk about them all the time, right? With the negative and positive correlation, whether we're expanding or contracting. It might take you a little while to figure it out. But when you get to the point, you stare at these charts every day, you don't have to go through it every time. I look at this and I know immediately. It just flashes a signature to me. What is this indicator telling me, right? That it just with every time frame. That's why when you get a workflow down, right? When you get a workflow down, like if I start, I'll start on the daily, right? And work my way down all the way to a 15-minute, 9-minute. Then I'm entering positions down here on the low time frames. All that workflow I just did was just to give me a bias on risk. This is another thing. A lot of traders, they have zero clue about risk and how to limit risk, how to put risk on in different situations. So if my bias is bullish on Bitcoin for the daily, all my scalps to the top side on the low time frames, I'm going to use the full power of my account with zero leverage, right? Zero leverage. You don't need leverage in volatile markets. Another huge scam going on. Oh, I can't believe this crypto exchange offered me 100x leverage. Oh, they're great people. Nah, they're just serving you up on a platter, man. They're going to liquidate your ass. That's what they want. They want you to use all that leverage. People don't understand leverage, and it's a shame, right? You don't need it in volatile markets. And maybe you haven't noticed lately, every market's volatile. Forex is even volatile. Everything's volatile. There's nowhere to hide anymore for these people using lagging indicators. That's why this is the perfect time to come to alpha trading, right? Take a break. Everybody always has to be in a trade. If you're making a transition, if you're looking for a new way to trade, just take a break for a while, right? Learn something new, because here's the problem. If you continue trading while you're learning, as soon as you're not understanding the indicators, what are you going to do? You're going to revert right back to the old stuff that you know, that you've been using, which is probably the reason why you got here in the first place. So it doesn't make sense. If you start to learn, I love the ducks. When you're starting to learn, right, you just want to put it down for a while. Just put it down for a while. We all had to. Because you will get confused. You get confused big time. Oh, whoa. What am I doing? Jesus. All right, expected move on SPY. Yeah, what the hell, man? My bell didn't ring. Expected move on SPY, top side. Wow, this is interesting. So the expected move to the top side just breached the first standard deviation. We're talking about 413 and 3/4 to the top side, 410 and 3/4 to the bottom. Let me see where this daily range opened up. Let's flip this back on SPY now. Give me a second. Okay, let's go back over here. Yeah, there's a daily range, right? So you close down here, a little bit wider of a daily range. Big time. Here's the top right up here. Where are you, little booger? I think it's stuck right under here in the weekly range. So yeah, is this thing going to dive down? It could. This thing is a magnet. This weekly range, look how tight it is. That's the red and the yellow dots right there. It's going to be wild. We're going to see some massive swings today, tomorrow, Friday. So you got the bottom side, or no, that's the top side of the 68.3 Laplace. What we got here? 50 cent 411 puts, huh? Interesting. I was a little late on this, obviously. I would have liked to see those when this baby first opened, but I was getting carried away as I do. Well, you've got the bottom of the monthly range. Towards the bottom side of the 68.3 daily Laplace distribution range. Top side of it's this little white cross. Bottom side's this white cross. Every day, the new daily distribution levels, Laplace and normal distribution, are going to populate, right? You can see the first standard deviation normal distribution's up here at 413.5. Move this up a little bit. Where are you on the bottom side? You're popping in right now, I think. Give me a sec. Where are you, baby? There you are. 407.25 down here. First standard deviation to the downside. And like I said, these expected moves, yeah, man, same. 410 3/4, 413 3/4 at the top. So you got about a 3-point range here on the expected move. 313 3/4. Where is that up to the top side? 413 414. Yeah, of course, it's right up here by the 1SD. 413. Where are you at? 410. Are you gonna be right at the bottom of monthly? No. It actually yesterday, that candle close yesterday is right about the expected move on the daily to the downside right now. Interesting indeed. Yeah, no, obviously, if this gap up, you gapped through the daily range. So this doesn't need to come down and get tested. And I would say it probably wouldn't, but you got this weekly range. And if the bulls don't come out of the woodwork and just pump this thing down, you're just going to come crashing right back down into it. It's probably what we're seeing here. Let me see if these volatility reads changed. 4 hour, no, I want low. Let's start on the 45. No, they didn't. You've got the 981 contracting positive. The other two are positive, and they're expanding. Let's see what the 33 says here. It's already setting up some hidden bear on the 33. Yeah, everything down here on the 33 is expanding, positively correlated. This thing might not be dropping down there to test that, to be honest. See what the 15 does. You know, it's trying. It's trying. Yeah, 15-minute looks pretty strong. I'm not going to lie. Kind of surprised this thing is sliding. But you can see, look, I mean, the pre-market, right? You were having that outlier yesterday, right? As soon as the market opens, boom. Because you had the gap up, right? It's positively correlated immediately. Well, this thing's pulling. But look, you were outside the power mean band on the 15. Where is the wave trend right here? 411.6. Probably right here below. Yeah, right bottom side of the weekly range. Bottom side, you can see here's the center of the monthly, right? Boom, just got a little wick on this 15-minute candle, wicked right to it. Trust me, the bulls are going to be sitting here in this area. Bulls are going to try to keep this up. That's why I'm looking at the volatility reads. To get through this area, get down to the top side of the 68.3 through here, you're going to need some expanding volatility. Even low time frame trend. Let's drop down here. Let me see. Yeah, and that pre-market, I mean, they didn't even set up any hidden bear or anything. No bear div at all. In fact, this thing crosses a zero mean here. It's going to be setting up hidden ball from this bounce off the zero mean. Yeah, you get down here, turn back up. This thing could pop. I'm telling you, what I'm seeing in this volatility. Woo. It's trying to trend too. That's what I'm talking about. But look, the predictor is saying to the top side. Predictor is saying to the top side. All the fishers are up. This is a really low time frame. This is where all the action's happening, right? This is where the algos are down here. Get on the 1 minute. So I'm setting up. Yeah. Got a positive correlation. This crosses up the zero mean right here with this hidden bull div. We could get a pop. Look at the volatility. 981's falling off a cliff. So did the 525 right after the open. This is a 1 minute chart, but the volatility is powerful down here, man. Real powerful. Is it going to bounce right here on the 9 log MA? Could. Yeah, that's right. Our moving averages, they're log return moving averages. They're not simple moving averages. They're not exponential moving averages. Those indicators lag. And this is what blows my mind. Everybody that uses this stuff, they hear it all the time. Lagging indicator. Like, well, it's a lagging indicator. I don't understand why people would want to use that. All right? We all did. We've all been there. We've all used lagging indicators. It's rough. It's rough. You know, the good ones, you can get a little bit of a strat, right? You can build something. And as long as you're taking your profits, limiting your losses, right? You're acting like a professional. You're not emotionally attached to the trade. You know, it can work out for you. Emotions are good, ladies and gentlemen. Don't let these people psych you out. I'm sure the floor back in the 80s was a riot. You talk about emotional. I've seen the videos. I've seen the vids. It's nuts. I was born in the wrong decade. I was too young. Too young. When everybody was trading the floor, I was heading off into the military. Maybe I should have learned how to trade. It's all good. Serve my country. It's all that mattered. Okay, total random walk on the 1 minute. This is freaking fun right now. I'm waiting. Look at this returns oscillator. All right, you're just waiting for this to cross the zero mean. And if it does, and this stays positively correlated, mean, even these fishers, they're starting to, I mean, you got 3 below the mean of the bands. They're already at the 2 SD. That's why if you want to see these indicators in action, use the replay function. Go down to a 1 minute. If you have a premium account, drop where the algos really are jamming, like on the 30-second time frame, and watch the magic of these indicators. Watch how all this works. Now here you go. You're crossing the zero mean. Correlation went negative, which is interesting. Look, the fishers turned up. You see here, volatility, the correlations, right? Your 981 and 525, both expanding, positively correlated. All right, this data set's definitely, this 1 minute time frame is definitely moving up. The 2400's on a slow contraction, negatively correlated. This is a recipe for this thing to move right back up, and you see it happening. And there's the core there. That negative correlation just disappeared. It's probably going to flip positive here. Let's see. Yeah, it's still there a little bit. What are you doing? Predictor still to the downside though on the 3 minute. Low length volatility trying to expand, but it somewhat fell off a cliff, positively correlated. That's why this 3 minute candle right now kind of trying to pull back. The battle of the low time frames, man. The battle of the low time frames. Let's see here. Yeah, this makes sense. Come down, test this weekly. These bears, they're going to try to, they don't like it up here. That's why you're seeing this, right? Both sides, right? The bears want this data set below the monthly, right? Look what happened here. Bears run this thing down. Where'd it bounce from? What's that blue line? What is it? On the daily. And what was that? Friday? No, it was Monday. No, it was Friday. Monday, Tuesday, and we got the new day today. So on Friday, that dump, what kicked it up? First standard deviation normal distribution. The green line's the second support level from that daily volatility range, right? They kicked it up. What did the bulls do at the end of the day? What is the mission every day by these bulls and bears? Once you get towards the end of the day, you start to get a little insight where this new daily volatility range is going to be. Look what the bulls did. They run it up and they closed it above it. Now, usually you're going to find some support, and you can see it even in the morning gapped up. Then the bears are like, oh, hell no, and they ran it back down through. I'm telling you, man, the bears want the data set down here. Bulls want it above the top side. You can see the battle going on. Every time you get up close to the top side of this monthly, the bears just drill it to the downside. Same down here. The bulls run it up as soon as the bears get it below the bottom of the monthly. We're going to see this all week. A lot of volatility in this data set, man. A lot of volatility, a lot of great intraday trades. If you're trading 0 DT options, we had a good last week, had a good start to this week, right, boys? I mean, it's been pretty damn easy. Yesterday, tough day yesterday. I mean, look at these candles, man. Good luck. Good luck. Look at these wicks. You got to be quick. This is why you trade the 1 minute time frame. There are trades here. But when you look at this on the VRE, that is tough. That was a tough day. Let me see. Yeah, I want to see what happens here at the weekly. I mean, you're pretty much there right now. Let's get SPY on here. Low time frame. What are we on? 15 minute. Pulling you down. Let's put on the low length RMLR first. Hey, well, there you go. So yesterday, that dump, where'd it go to? All right. Pretty much third standard deviation band. All right. Third standard deviation band. No brainer pre-market. They ran this thing up. Look where they ran it up above. All right. This is the 30 length power mean. All right. The blue and pink line. Not the thick one, the skinny one. And you can see that last 15-minute candle. That gap up went right to the second standard deviation band around the RMLR, rejected down, got a wick below the first, pulled back up, closed above the 30 length, right? 30 length power mean. Now we're dumping back out. Where's this at? Where is the 11 length? 411, 411.1, huh? 411. Yeah, down here. What? Center of the new daily? Yeah, right on it. Do I think this is going to come down and tap this 411 area? If it gets by here, it definitely is. I'm telling you, the bulls are here, man. The bulls are at this weekly range. These bears are going to have to just overrun them. The bulls will sit back. They'll let them do it. That's what this game's all about, what you're seeing right here. Right? When you get these runs on this 15-minute like this, the other side just going, all right, boys, spend all your energy. We'll be here at the bottom waiting for you. Algo fun. Here it comes. So this would be full mean reversion on that 15-minute RMLR. That's what you're looking at. It's almost there too. Where's a 30 at? And I know a lot of people are like, oh man, this guy, whoa, this chart, whoa, that's a lot of noise. Yeah, all this noise is actually telling you something. As a volatility trader, noise is your friend. You want as much as possible. That's what the VEPS are all about. You're covering all your bases. That's why people that trade traditional TA, the more noise, the more you have no clue what the hell is even going on in the market, because you're using a bunch of lagging indicators. Nothing. You never see anything vibing together, right? Nothing is giving you a confluent read, if that makes any sense. Not so with these indicators. There's a lot of stuff going on here. This is good noise. You can see on the 15-minute, right? Just hit the first standard deviation to the downside on this current 15-minute candle. The full mean reversion here, blah, blah, blah. Let me see something on the 15. Populate, my friend. See that power means. There we go. There we go. Wild 15-minute. Yeah, man. Right. Pre-market gapped up above the power mean band. This thing just slammed right down through. Let's go up here. Let's see what's happening here on the 33. One of these time frames here, pre-market, this thing's coming back in to test this wave trend. Reverse wave trend. TradingView, it's taking a while today to populate this badass indicator. There you go. This 133-minute candle is just spanning the whole power mean band. Tough. Tough, 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 tough. See, I'm going up through these time frames. I want to see where this revert. Where is this candle? Where are we? So you can see, look at the bull div on the 45, right? This is that weekly and monthly. Those volatility ranges, just they're magnets, man. But look at the bull div on the 45. Hasn't crossed a zero mean yet, right? Hasn't crossed a zero mean. The power mean band on these low time frames are all super tight. What's that telling me? This thing is going to move. It is going to move hard too. Let's see, 410, 13. Interesting. Yeah, there we go. So right now it's at the bottom of the power mean band on the 4 hour, barely hanging on to the 33 log MA. Right, there's the 9, there's the 33. Got a wick below the 33. It's pulling back up above. This 4 hour candle, it's breaking it right now. So wave trends down here, 410.1. 410.1. That's on the 4 hour. 410.1. I'll tell you what, it's pretty close to the bottom monthly range. And at this point, pretty sure this thing's going to dive down here. I mean, you're going to see this recurring theme. I'm telling you, mark my words, you're going to see this recurring theme. Back and forth, trending around inside this monthly range. All the weekly and the daily volatility range is packed inside of it. This is literally like a freaking, this is a ticking time bomb is what it is. I said it early in the week too, that I'm not going to be shocked at all if we're seeing like top side of a weekly or bottom side of a weekly volatility range, right, in the next couple of days. And where is that to the downside? Let me see something here. Dun, 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 dun. Where are you? There you are. 403. 403 a point. Let's just round it down. 403, huh? Now, let's go to the daily. Let's go to the weekly. 403, huh? Turn off this RMLR. What am I looking for? Current candle distribution levels. 403. 403. There it is right there. First standard deviation on the weekly. 1 SD, man. 403.5, but yeah, that's all good. So we got a 1 SD down there at the 403 level. Could we be down here? We sure could. We surely could. I'm seeing crypto right now more bullish than traditional markets. I'm not going to lie. Not going to lie. Yesterday was kind of running around with the dollar. Bitcoin was, while SPY was kind of doing the opposite, not correlated, right? Not only do we correlate volatility and entropy and all these different indicators to price action, and I'm talking about the non-direct people that think are non-directional indicators. When you correlate them to price action, it gives you direction. I've talked to some really smart people about this stuff. You'd be surprised how hard this is to understand. And I don't get it. I don't get it. We've proved it for years now that this is how you do it, right? Correlation. Not only can you do that, you can correlate assets. This is huge when you're trading the markets. It's a little boring trading one asset, right? Find out what it's correlated with. I'm talking anything. Like say there's somebody out there. Well, I'm stuck. I like trading Google. I like trading Tesla. See if they're correlated. See if they're correlated together. If they are, trade them both. Same direction. If they're not correlated, Jesus, man, you can long one, short the other. It gets powerful, especially when you throw in Dixie. Correlate them with Dixie. See if Google is correlated with Dixie. See if like something like Tesla is correlated with Dixie, right? If neither one of them are correlated with Dixie, see if they're correlated together. There's so many different things you can do with correlation. A lot of people don't understand it. They're trying to figure out why the hell they can't win any trades most of the time, scavenging their charts. Why is this not working for me? Well, it worked that one day, so I'm going to stick to it. I'm not saying you can't get a decent read with that stuff, but guys, really hard to become a profitable professional trader using lagging indicators, because the high frequency trading firm algorithms aren't using lagging indicators. They're using exactly what you see, right? They're using the distribution. It's all about math. It's all about math to these people. So it's all about math for us. All about math for us. Oh boy. Yeah, SPY. This week's wild. This week is wild, man. Indeed. Yeah, I see the bottom of this monthly getting tapped here shortly here. 410 area. 410 area. Could this thing run to the top side too? Sure could. You're going to see a lot of it. You are going to see a lot of it. We've been seeing it all week, man. This thing is freaking, and you got to love it because people don't understand. People don't know they don't have this indicator that the top side of the monthly range is right here. The bottom side's right here, you know? Let's see here. Let me go back. Where is that tiny little booger? Yeah, like last week, right? Had the tight range as well. I mean, like on this day, kicked it up from the second support level, right here. First standard deviation on that day. First standard deviation on this day that just happened to be right at the bottom. And you see how this, any time it's gotten below that monthly volatility range, there has been a distribution level, or there's been a support for the daily volatility that's kicked it up to where? Top side of the monthly, right? Top side of the monthly. Good stuff, man. Good stuff. We love this indie. And people pull on, look at this and just, what is that? Look at that mess. It's a beautiful mess. You have no idea. If you understood how to read this chart, which that's what we do here. We teach people how to read this chart and all the others. And we don't charge money to do that, right? Makes us happy, man. We like teaching this to people, especially if they're serious about learning it. Let me see here. Oh, we got it here. Nice. Beautiful. Oh, we got another Matt. We like Matts. Where's Matt from Alpha Trading, though? Oh, yeah, he's on the road. Seeing, because the expected move will move too. Yeah, right now, wow. That thing dipped down to a little under 409.5. Top side's almost down to 412. That's because you pulled right back into the center here, man. And this is what I'm waiting for, right? I want to see this thing tap the bottom side, and then what am I going to be doing? Especially if you get a wick through the 68.3. I'm going to say it right now. You get a 15-minute candle. Number one, close below. Look where it's having trouble right now. The bottom of the daily volatility range. Why? Because there's going to be bulls sitting right here. There's going to be algorithms sitting right here with bullish tendency. Bears, oh, what, honey? Woohoo! And they just run off. You close a 15-minute candle. Look, it tried. It pulled back up. Now this next 15-minute candle, if you see this 15-minute candle get a wick down to the top side of this 68.3 and then pull back up and close inside the bottom of the monthly range, I'm immediately looking for calls. Where? Probably right at the weekly. I'll probably be looking at a 412 actually. Probably center of the monthly. Yeah, right in this area. So yeah, you get down here under 410. Those 412 calls, geez, they're only 40 cents right now, but you're going to get probably a 50% discount if you're just patient here. But I'm telling you, the bulls are going to be waiting right here. I'm
getting money back.
yeah.
Get out of my way.
So, it could kick up from here, right? On days like this, though, I'm looking for the extremes to get into a trade. Look where the data set is. You're right here in all this macro volatility, all these tight daily, tight weekly. The month for a monthly range, that's even pretty tight, right? Let me see exactly what the percentage is. Yeah, 1%, man. 1%. What's that tell you? Anything 1% and under, probably going to do some trending. Has this thing trended? People will be like, I'm looking at the daily right now. This damn chart's not trending. Yeah, reel it in a little bit, big boys. Come down to the 15 and look at all the trend that's been happening to the top and to the bottom. It's exactly.
It's funny. I kind of noticed something.
Yeah.
If you look at yesterday's sell-off,
yeah,
just close, and you look at right now between the open and right now, just on the one. I'm on the 1 minute.
Yeah.
And 3 minute. It looks exactly the same. The literal move looks exactly the same.
Yeah, for sure.
Right now.
For sure. No, and this is why I'm telling you, man. The algos they're in get her done mode.
That's a little hard.
Yeah, we're gonna see a lot of this week. I'm still in the camp too. I think this thing's coming down. Let me see here. Let's go back down here. Let me look at the 33 though. Turn on the slow length. But see, this is what happens though. This is why you have to use a workflow, right? I was looking at 15. Wait a minute. Was that the 15? What time frame was that? Yeah. 410, 411. Wait a minute, man. What time frame was that? Am I losing my shit right now? Is that a lower one? No. God, I thought it was a 15. That is the low length. Hold on, let me turn something on here. Boy, that thing just pulled up quick. Came up. The RMLR came up. Because I know that thing was deeper than that. What the hell? This thing flipped on me. Oh, well. You did. You got below. But look at the 33. Came back down. Tested this 11 length RMLR. Now is it going to kick up from here? Sure trying. You close a 33-minute candle below here, you're going to start running these bottom distribution band or volatility bands, not distribution. They are first, second, third standard deviation, but these are just volatility bands. We throw them around everything. So here's a good reason right here why this baby is just stopping in its tracks. The 30's below. I mean, see, you got the 30 length down here though. For that is right at the bottom of the monthly. This is tricky right here, man. This is tricky right here. Doesn't surprise me though that you bounce off the bottom of the daily range, because the bulls are going to be protecting these areas. And this is the thing with this chart right here. There are so many areas for retreat, right? And to push, right? There's so many areas for like the bulls or the bears to retreat to, set up shop at one of these distribution levels, volatility ranges, and to push the front forward. I mean, it's trench warfare at this point. So this is what you're seeing. The bulls just guarantee it. First, they're at the middle of the monthly. I already talked about this. And the top of the dailies right there. Or no, that's actually first resistance level. So then you got the weekly range, right? Then you got the top side of the daily, middle of the daily, bottom of the daily. All these retreat points, the bulls. They're going to finally kick it up from the bottom here? Or is it going to happen down here at the monthly? You're creating this little 15-minute doji because you're trapped in the bottom side of this daily volatility range. Something's got to give. Something's got to give. Let's see here. So much for pre-market pumps. Let's let this power mean band populate here. See where this baby.
Can we take a peek at near USD?
At what?
Near USDT?
Say it one more time.
Near? MEAR?
MEAR. What is that? Oh, mirror. MEAR. Oh, I'm on 4X. Hold on. Oh, there we go. MEAR, huh? That is right.
It had a good resistance. So.
MEAR?
Nancy.
Nancy.
And it's a Nancy.
Near.
I'm near you.
Are you now?
I got near to profit. It's more appropriate.
Bro, I met Rapping Carrot's cousin. Peeling.
Nice. Nice. So peeling.
It used to be Rapping Burrito, but then my account got hacked.
Right.
Bro, I met your cousin. Peeling carrots.
Jesus. So the daily volatility on this thing is just caked. Zippos. There's a move coming. I'm seeing hidden bear div setting up. Hidden bear divergence setting up. But the returns oscillator is trying to turn up here. Trying to turn up. It's kind of flat. Z-score's in the bottom. How long has this thing been around? Here. What the hell have I never heard of this shit coin? Let me see here. Nothing pop up. Right during remember back in history where everybody got scammed into fucking wearing masks? Yeah, October of 2020. We were deep in it, weren't we? Jesus. Funny. Let's see on the daily or on the weekly.
The start of the compromised immune system of the human race because everyone quarantined and wore masks for multiple years.
Yeah, man. Yeah, it's ridiculous. Yeah, exactly. That's how they're all talking now. I didn't touch that shit for 10-foot pole.
It's a scam.
No thanks. I'll tell you what, man, on the weekly, you're at the bottom of the power mean band pretty much, and this thing is setting up some bull div. All right, thing's setting up bull div. It's positively correlated. Yeah. You're waiting on the weekly for this thing to cross a zero mean because all the fissures are below are actually, man, this thing, like I said, with the volatility read too, look on the weekly. The weekly reads are low too, man. The weekly volatility falling off a cliff. 981 has been down here. Not enough history for the 2400 length. There's not too many assets that do. All right, Bitcoin will populate it on the weekly, SPY, a lot of the traditional market. Let me see here. Let's go.
A scam!
Oh, there she is.
No, that's the he.
Oh, geez, sorry. That's the he.
Is it
I forgot they're so young. They all sound
They're
alike
young
at that
and
age.
squeaky. They're young and squeaky.
It is a scam. Tell him, kid. It's a scam. Yeah, here's a 3-day. So you can see on the 3-day already crossed the zero mean. This thing didn't budge. See this, man. But you're outside the power mean band, so it's almost a no-brainer you're going to come back up. Returns mean revert. That's what this power mean band's all about. And that's why you'll see the data sets just cruising inside the power mean band, right? They feel comfortable. You get outside, know that the data set, that the returns are mean reverting and the data set's going to follow at some point. Right here, this thing rode the 33 power mean. That's the pink dots, right? They're gradient. Now they're blue up here. You've got reverse wave trend crossing down them though right now. I do see this thing popping up here in the returns mean reverting, at least to the bottom side. What's that, 1.9? 1.9. That's on a 3-day. How far outside are we on the 2-day? What are we doing? That's why when people are like, oh, why do we have a reversal? Doesn't matter what time frame. You get reversals when you're outside the power means. All right, that's when you get reversals because returns mean revert. We talk about it probably 1,000 times every stream. Just want people to understand what's going on. That's why we don't use lagging indicators. I mean, like our RSI, the relative strength, right? Of what? Of returns? No. Well, why would you use it then? Because price action's following returns. That's the only sensible divergence to use, right? I mean, obviously, it should make sense to people. That's why I try to put it in those terms, where it's like, why are you looking on divergence within the same thing? Price and price. There's no div there. That's why when the returns oscillator is showing divergence, and it's high, 9 out of 10 times the RSI is not going to show that divergence. But everybody wants to use it. Then the RSI is going to float up into so-called, which there's no such thing as overbought or oversold. That's just ridiculous. If something's oversold, that's because everybody's selling. Maybe you should jump on the bandwagon. If it's something that seems overbought, that's because everybody's buying. And that's when you see the RSI just snake around on one side or the other. This is why we have standard deviation bands. And this is only a 2SD band. But you are not going to see, you're not going to see the returns oscillator come down and just snake around the bottom side. I can go back into crypto. Remember when we were at like 6K dumping to 3K, that 50% dump? I mean, dude, the RSI was just jacking people. All those moves. When people were thinking that, especially the run up to 20K, dude, if I remember correctly, their RSI was pinned to the top side at like 12K, right? And so everybody then, why didn't a ton of people make money during that bull market? Because everybody's trying to short it like a bunch of morons. Pardon me. Right? Everybody was shorting it because the RSI was in the overbought zone. And it ran all the way to 20K. The returns oscillator wasn't showing that. Right? The returns oscillator, if you use the correct workflow, kept showing continuation divergence to the top side, hidden bull. And it kept bouncing off the power mean band all the way to the top at 20K. Why did it reverse finally at 20K? Because we have an indicator called a projection boss. And you throw that projection boss, and is what that does, that will project a distribution cone into the future. And the data set of Bitcoin hit the 95.4%, which is the second standard deviation, normal distribution, right? We actually got a wick through there, and it hit the 3SD on that current monthly candle. Pulled back from the third standard deviation, closed back inside the projection of the second standard deviation, and then the resulting dump all the way down to 3K happened. Right? That's why it pulled back.
Emotional damage.
And was building up every time that hidden bull was building and running that data set to the top side, it was setting up bear div. It just kept setting up bear div, hidden bull, bear div, hidden bull. That's why on the way up, if you remember, data set, pull back to the power mean band, pull back to the power mean band, pull back to the power mean band. It did it like 4 freaking times on the monthly, all the way up to 20K. And every time it did, people were using way too much leverage and they were trying to short the market. Bitcoin took a club and beat them in the head all the way to 20K. I know people that lost a shitload of money on that bull run. How in the hell do you lose money in a bull run? By using lagging indicators. Oh, no. That's how. By thinking that some overbought or oversold zone is real. The only thing that's real, let me turn this off.
P&L.
Oh yeah, P&L for sure, bro. Realized.
That's what's real.
Let me go up here. Let me put this on Bitcoin. You know what? Since we're having so much fun, I might as well show what I just explained. Correct? Am I on the index? He says some Mac. Okay, here we go. Let me scale this down here real quick. Let's reel it in. There it is, right there. There it is, right there. Make sure. Yeah, it's 20K. Yep. See that little blue dot right there? See that little blue dot? That was the top, right? That was the top, 20K. Third standard deviation on that monthly candle. Here's the probabilities in full effect. You know how many people got wrecked right there? Look, you run up to 99.7% distribution level. Immediately, that blue dot right there, there was a 95.4% chance before this close that the candle was going to pull back inside there. There was a 68.3% chance it was going to pull back to right where it did, right at the first standard deviation. This is the probabilities in full effect. You run up to the 99.7, immediately there's a 95.4% chance you pull back to there, 68.3% chance you pull back to there. It pulled all the way back to the first standard deviation, then the dump ensued. Now watch this. That's the last thing you hear before the somebody in Kentucky's trying to jump his motorcycle over the holler. Hey, y'all, watch this. Let me see here. Let's go back. Wow. Jesus. Hold on here. Where's my drag and drop? There it is. Beep, boop, boop, beep. That's. There it is. Boom, right there. September 2015. Bitcoin was at about, what was it at? $250? Yeah, $250. Ugh, where did I buy in at? Right up here at 400. Right here. Yep. Right here, about $400. But anyway, this is Laplace distribution. Were the algos using Laplace distribution way back when? Apparently not. You go into our projection boss. Come on. Flip this to normal. Boop. And now, hold on here. So normal distribution is, give me 1 second here. 1, 2, 3. Yeah, that's all I need. Let me turn off 7, 5. There we go. There we go. So you run up to the 3 SD on the current candle. Pull back inside the current candle at first standard deviation, which pulled back inside this 2 SD band. That's a second standard deviation, right? So immediately, as soon as that happened, there was a 68.3% chance you were going to reacquire the first standard deviation normal distribution. When everybody was going, Bitcoin's dead. Bitcoin's dying. Look where it kicked up from, the 1 SD, right? And then, boom, you get the 14K high. Then here we go. We all know what happened here. This is where they, tricked everybody into wearing all those masks. You get the dump out. To where? To the downside. You got to wick through third standard deviation. Look at it. Pulls all the way back right to first standard deviation. Little low, but yeah, made a run to pull back. Then it bounces from the 1 SD again. Look, almost. That's why when we were having this dump from the high, I was eyeballing this down here. Like 12.5, 13K. Never happened. Never happened. Now it's, I mean, could it still happen? Sure it could. Is this projection still valid? Hard to say. And this is long. This is more or less to show you what happened on this bull run. You can move this up to the dump from the top now. Whoops, too far. Hold on. Back it up. There was the high, 70K. Almost have reacquired the 68.3 Laplace, right? It definitely, it dipped below the 95.4, immediately pulled back up inside, just was hovering. Then when you opened up this monthly candle above it, boom, then we start getting the bounce. Started getting the bounce. Now we got the 30 power mean up here inside the 68.3. And what was that at? 32, 33? And this was when I was talking about the 32.5 area, that stuff. What do you think I was looking at? Huh? Looking at the distribution. This is all that's real. This is all that's real. The distribution. And then you need to know, right? Are we in trend or are we in a random walk? Because that's what's going on inside here. Literally 90% of the time, all these markets are just random. Random. Okay. This turned into an educational seminar today. It's okay. What are we doing? Just like to show the power of the tools. We love this stuff. And the most powerful thing is when you're scalping, right? Or look, when you come over here. So yeah, on that near, what'd you?
Yes, I know. My 900 IQ is quite large.
I mean, this thing could reject here, but look, we know about this. If Bitcoin dumps near, near is going to follow. Look at the volatility read though on the daily. This thing is just, you got a move coming. You got a move coming, man. And I see hidden bear setting up, but the returns oscillator is not it's wanting to turn up here. It is wanting to turn up.
Yeah, I figured it has to be, something's got to be coming. It's been kind of just stuck in a zone for quite a few days there, and there's been some decent movement on the lower time frame for scalping on it. So I just want to see what it looked like with all the fancy tools, since I'll be giving those a try starting Thursday.
Cool. And you can see the contraction of volatility on the low length. Let me see here. At the end, let me see, man. That's why you're floating up, right? The low length contracted. It was negatively correlated. Look at the wicks you're getting up into the power mean band, and it pulling back. This is almost shots across the bow, especially when this is setting up some hidden div. Tough though. But usually, I mean, you get, if this stays contracted, in this low length correlation gets up here and then breaks negative on expansion, this thing's gonna dump. Give me a sec. I gotta go take the leak. Yasha, what do you got? Shameless plugs today?
Yeah, shameless plug indeed. Yeah, no, this Alpha Trading session is brought to you by Alpha Trading because we sponsor ourselves. And check out our Discord. It is free to join for the most part, and it is free to learn. Also, check out our indicators. You can get free access to the basic indicators that teach you how to trade volatility, probability, and statistics. And once you learn the tendencies of the volatility and the correlation to the price action, then you can step it up and check out our premium indicators, the ones you see here in the live stream that Bilbo is showing you on his screens. And you can get access to all those for a couple of weeks before you decide if you want to subscribe. If not, you can also keep the other indicators and access to the other indicators. As long as you're a member of the Discord, you can have access to those indicators. It's fine by us. We're happy to have you have those. And even if it takes you a while longer to learn the volatility, some people get it right away. Some people will take some time. It's okay. Whatever your pace is. We're not here to force you to do anything. We're just here to help you learn a better way to trade. And I'm not even here. This is clone of me talking. So that's because I'm busy doing other things right now. But I am here, just not here. I'm here in spirit. So my AI bot is talking on my behalf. And I make it sound just like the idiot me that's the real one. There you go. I'm busy flying other planes right now. So There you go. I hope you guys are enjoying what Bilbo is showing you on the stream today. It's pretty intense. I keep hearing it and looking at it once in a while. If you guys have any questions, of course, ask in the chat, ask in the live stream like you do. Ask on whatever channel you happen to be watching. And if you're watching us on TradingView or if you're watching us on Twitch or YouTube, come on into our Discord. TradingView, we love you for having us host videos on your thing, on your site and all. And it's great because that's where people are actually using our tools. So if you're watching us on TradingView, or even if you're not, but you can go to TradingView, please click that rocket icon, because every little helps to get us out to help another trader find their way to us. And if you're one of those people that showed up to Alpha Trading because you saw a video of ours on TradingView or some such place, then you know just how effective it is when our little camaraderie of friends and allies clicks on those little like buttons and all that stuff. So please do that just to help someone else, because, you know, you're helping someone else not get wrecked if they find their way to our station. So that's all I got to say today. Keep happy trading. Make bank.
Looks like Dixie got caught up here in the distribution. Well, first you get, Dixie opens up today, right? Bounces off top side. Look, you don't close a candle below the top of the daily range. The dollar bull's sitting here going, oh yeah, throw some wicks down through here. We don't give a shit. We're going to run this up to the first standard deviation. All right. First, you got a run up to the top side of the 68.3. That's the white cross line. Pulled back inside. Actually pulled back inside. That is the 4-hour 68.3 too. So it shoots a wick through the daily, pulls back down into the 4-hour, then runs it up, comes back, finds support on the top side of that 4-hour 68.3, goes right to the daily first standard deviation, right back down to the top side of the daily 68.3, right back up to the first standard deviation, right back down to the 68.3. This 4-hour first standard wick right to the 4-hour first standard deviation. Now it's pulling back again. When I talk about the algos running the distribution, it's exactly what I'm talking about. They know where these levels are at. They're using math. Right? They're not using lagging indicators. Hey, man, that was the yellow 21. That was a 21 exponential moving average up there. Oh, here's a 50 down here. No, it doesn't work like that. And we don't draw lines on our chart. Right? The code populates this every day, every week, every month, every 4-hour. Right? For the distribution levels. It's powerful stuff, man. It really is. A lot of people don't know about this. Why? Because there's nobody teaching it, man. And that's why a lot of people like to look at us and they're like, these guys don't know what they're talking about. I've never heard about this stuff. This is foolishness. They don't realize that this is what the high frequency trading firms are using. And there's a reason why. Go online. Find somebody else that's teaching you how to trade like this. If you find them, hook us up together, because we like to do little collabs and stuff. We can do some streams together. Talk. Guys, there's nobody out there doing it. There's a reason they don't want this information out. There's a reason why our small YouTube channel is literally shadow banned. It's a proven fact, right? Great information, dude. It's been going for years now. You could be Mason jarring up farts on a YouTube stream and you would get more views than we get. It's ridiculous how shadow banned we are because of the information we're talking about. There's high ups that don't want this out there. If everybody was trading the VEPS, their little scam is over, and they know it. That's why. How do you put a fire out real quick, right? How do you stomp out a revolution? You freaking stomp it out immediately. You don't let it grow, and that's what they're trying to do. That's why we came to TradingView. Right? We knew TradingView is going to respect this. They're not going to shadow ban us. We're getting plenty of views over here. We'll get 150 views on TradingView and we'll get 3 views on YouTube. This is serious. It's crazy how shadow banned we are on YouTube because of the information we're talking about. It's crazy, man. This is why they don't want you to know about this stuff, man, because this is how the algos are trading. This secret gets out, they're done. They're done. But listen, it's a cult over there in traditional TA land. Everybody's watching the same YouTubers, right? Everybody's using the same risk management strategies that have been getting them wrecked forever. When you get a bunch of retail traders and they're all putting stop losses in the same area, right? Oh, good Lord. Don't think that these
Emotional damage.
We've been telling people for years these exchanges are trading against you, and they have algos running to see where your stop losses are, to see where your take profits are, to see where all the retailers are just coming together at. That's why you hear all the time where you'll see a data set wick down to a certain area, liquidate a bunch of people, take out a bunch of stop losses, and pull right back up and continue on. That's why people
think about it this way. Think about it this way. If you know that, generally speaking, news organizations are owned by corporations which have agendas, which is fine. They have agendas. They push their agendas through their news corporations. If you know that they're providing you half the information, why would you think that financial news networks are doing any different? And when I say financial news networks, I mean any of those big news networks like CNBC or the little ones like the YouTubers, etc. They're all financial news of one kind or another, and they're all pushing the information that they get from the top. And by the top, I mean the big exchanges. How do I know this? I used to work for marketing these kind of things, and we used to push the information that we were getting from the bigger players, and we would also push the information about black shoals. Guess what information 99% of the people wanted to actually read? The garbage. You know why? Because it was presented in a nicer way. They made an emphasis. Even the ones that were honestly trying to tell people use black shoals, they were told to make the crappy information nicer and prettier and more attractive to the average user, because they knew that was the garbage that would get more money for us. So you are definitely being fleeced if you're using traditional TA. I mean, if you're in the 0.5% that makes money doing it, congratulations, keep doing it. But if you're in the other 99.5% of the population that uses it and gets wrecked within 90 days or less, maybe you should think twice and try to find the better way to trade. And that's what we do.
It's exactly what we do. Okay. So yeah, I just wanted to take a quick peek at the dollar. And as what the dollar has done here, here's the top side of the weekly. This is flipped, right? Dollar is showing some bullish tendencies, man. Indeed. Let's see here. Yeah. And look, you got a weekly. I talked about this too, that the bulls are probably going to run the dollar up. You're going to populate a new weekly above the monthly. Now dailies are populating above the weekly. Look out, man. I'm warning everybody right now. Look out. If you're out there swing trading, you've been in a long or something, I personally would be taking my profit. I don't trade high time frames, right? I scalp low time frame volatility, but I know there's people out there trading that way. Guys, be careful. You think this little gold pullback under 2K was bad? Wait till it hits the mid. It's on its way down to, I think, that second standard deviation on the weekly, which is about 1940 area. And that could just be the start. I mean, I've got levels where it's pulling down like the 1850, under 1900. That'll get the gold bugs freaking out, right? That'll get the gold bugs freaking out. BTC, on the other hand,
get them to shift their pants.
Huh?
So that'll get them to shift their pants.
Yeah, they'll be Peter shifting in their pants. Yes, they will be, bro. Because right, you break above 2K. Oh wait, we're at 2050. Gold's going to the moon. Okay, man. Okay. You talk about manipulation. What are you buying?
Emotional damage.
I mean, most people out there are buying paper gold. I got a news flash for you. There's nothing behind that paper. You guys are just, I don't know what you're doing. Meanwhile, you got Bitcoin, right? You got a solid supply cap. Not going to raise. Hell, 4 million of them have probably been lost on the blockchain, or they're locked up in Satoshi's wallets. Guys, there's probably going to be 16, 17 million at the most. 2140 is when the last Bitcoin gets mined. Thank God I've only got about probably 20 summers left. If that, I partied hard and beat my body up skiing and fucking in the military and all kinds of shit. So I'm aging very quickly. I hit 50 and it feels like it's all downhill from now. 4 years, I'm 54 now. So yeah, crazy. But anyway, yeah, this is going to get wild, man. This is going to get wild. Why people buy gold, I have no idea. We're in the digital age. Right? Digital currencies. There's going to be a digital store of value. Bitcoin. Right? Crazy, man. And there's what? How many cryptos are there now? It is just so stupid. Here, let me see some real quick. Let's see. Where are you? What the hell is that?
Whatever the number is on CoinMarketCap, up it by 50% of experimental ones and ones that have not yet been released on CoinMarketCap.
24,225 different cryptos. Guys, how many of those do you think are going to survive? Not a lot of them, man. Not a lot of them. This is literally the test net going on right now. And if you're in cryptocurrency right now, realize one thing. With all this tech, this shit's brand new. Maybe you didn't know it or not. I see people come in all the time and complain. It's like, did you not know you're just beta testing? That's all we all are. We're all a bunch of beta testers. This tech is all so new when it comes to all these wallets. And now we got Bitcoin ordinals. Now people are inscribing shit coins, the BRC20s and shit on the blockchain. There's so much madness going on right now. It's crazy. I'll tell you what, I know one crypto that's going to be around forever, Bitcoin. Why don't I ever talk about ETH? Anybody ever wonder why I never talk about ETH? Because it's a scam. There's no supply cap like gold, right? No supply cap at all on ETH. What the hell are you doing? They're going to keep mining this thing until it's just, guys, it's ridiculous to me. It's a gas scam from day one. There's a reason why 2 of the 3 founders said later, right? Took off, started their own projects, Polkadot and Cardano. A lot of people don't even know that. That's why people that just come into space and they'll just talk shit. ETH's the best. No, it's not. And it in my opinion, yeah, at some point, I don't see it, man. I just don't see it. People are going to catch on. There's better chains, man. There's better chains. The gas fees on ETH are just insanity. But now because of all the BTC ordinals, right? Oh my God. Fees are going up on Bitcoin now. That's the main reason is these BRC20 fucking stupid tokens that they're inscribing on the Satoshis. It's amazing, man. Amazing.
Think about ETH and think about fiat and how these two things are simpatico. Basically, who likes ETH the most? Governments, central banks, and large financial institutions who have all of the developers in quote unquote the largest crypto developer network in the world. Yeah, they're the largest crypto developer network in the world because they work for all the large institutions with all the huge bags of fiat. So of course they like something that is similar to fiat that they can control because they have the biggest bags of it. Duh.
Let me see here. I love it. Call me Gramps. I like you, dude. Real Adele. Let's focus on what Gramp is saying. I love it. I'm just making sure I didn't miss anything here. Fly. Should I do keep it down? Here's my girl. Graham is learning indicators. I fell in love with that girl. You got me laughing. Oh, good Lord. I love it.
You what?
That's right. Let's get off that. Let me go back.
Like sewing scoop.
So yeah, for people who just checked in here, let's go to gold. And gold's popping, right? Gold's popping off of what? First support level on the daily. Makes sense. Look, there's a lot of volatility right here. You got the monthly and the daily center right on top of each other. Would I be shocked right now if gold flew up? Right? That's the top side of the daily 68.3. Hadn't been fully tested. Bottom side of the daily range has, and it rejected. Got down. Here's algo's running the first support level on the weekly. All right, first or second support level on the weekly. There's the bottom of the weekly range right here. All right, there's the bottom of the weekly range. Do I think the gold data set's going to get back up above 2K with any ease at all now? No, absolutely not. These bears mean business. They're running gold down, man. Running gold down. And I already showed on the weekly. Let's see here, gold bugs. What do we got? Peter Schiff, you watching? You should. It'll probably save you some money, Goofy. And there we go, right? So here's what's going on too. You get a wick, This is gold's weekly candle. You get a wick through that blue dot. That's a first standard deviation. Immediately during this weekly candle, there's a 68.3% chance this data set does not close below that area. So, right, pulled right back up inside it. That's why this week, this thing goes sideways down here under 2K. All right, I'm not going to deny that. That could definitely happen. This thing could close inside there. If you start to see, say tomorrow, a daily candle, say today the daily candle closes below that weekly 1SD, look out, man. It could happen this week. Here's a 2SD on the weekly, 1940 area. That's why I'm looking at that. What else is there? What else is there at that 1940 area? This is the confluence. This is what I'm looking for. That was a weekly distribution level, right? The 2SD. Come on, drag up, bub. What are you doing here? Lagging. You're lagging like an RSI. Stop.
2 hours
Let me scale
later.
this down. Look at the bottom of the weekly range. 1944. All right, 1944. Let me move this up a little bit more. So today, fifth standard deviation on today is what? 1936. But I don't think this is happening today. All right, I just don't. You can already see I see it possibly coming back up. I talked about this yesterday. I went in and made a little post. Should have put some charts. And I was like, look, the bears ran it down below this weekly support level. That's the first weekly support level. And I said, the gold data set's going to have trouble getting back up above this. Look where the new daily range populated, right? Look where the new daily range populated, right above it. So it rejected off the daily range. Until I see gold literally close a daily candle back above this monthly during this last couple weeks here, it's not happening. If anything, it's going to reject from up here again, and then you're going to get another dump. That's why I'm looking for that 1940 area, but it's going to depend on what happens if this data set gets back up here. Right? Is it going to reject off that weekly support level? That's resistance now. And these areas mean business. When it comes to traditional TA, drawn horizontal lines on data sets, guys, that is not support and resistance. You've literally got goofies out there teaching people how to draw little liquidity zones, right, at these data sets. They'll literally draw a liquidity zone from the top of the candle close to the top of the wick and be like, oh, it's not getting by there. Dude, those things get blown up all the time. That is not real support and resistance. How in the hell do you have real support and resistance on data sets when it's a random market? Well, I don't think it's random. Well, we have an entropy indicator that shows you it's random most of the time. What do you have that shows that it's not? That's all. Bring it. Let me see why. We get people that, go against it all the time, and it's like, show me why you think this. Or do you think this because you're in the echo chamber? Because everybody else is talking about it? Because the people that are at the top of this echo chamber don't know what they're doing, right? They just don't. It's a fact. And you got all these people following him, all the other YouTubers mimicking him. There's one guy that they all mimic. We all know this. It's been in crypto for a while. There's one guy. He gets the most views. Unless there's another just goofy out there. People are afraid of his lawyer daddy. I'm not going to talk about him because his dad likes to sue people that talks about him. And it's a riot. And we all know who I'm talking about if you've been in crypto for a while. Total nerd. I'm a nerd too, but hey, man, it's all good. He's a goofy little nerd. Is there a difference? Yeah, he's a hippopotamus. Okay, let me see here. Let me scan through traditional here. Oh, copper on the move again there, Warlord. Looks like is Warlord in here. Where's Warlord at, man? He's been gone for a few. I saw him in another chat. Where's our little Warlord? But yeah, copper's up 2.3%. Interesting. Natural gas, of course, gonna have a down day. I think can't get above $7 to save its life. And that's a U.S. fund. Let me see here. What we got? Anything popping? Yeah, we don't care about Delta Airlines. How are you up 3.5%? Key banking 4.8. Carnival Cruise Lines. It looks like we got some airlines. Carnival Cruise Lines is up almost 5%. What are you doing besides packing on 3,000 fatties onto a boat that eat 10 times a day? No offense. Last cruise I went on, I was like, I'm never coming on another cruise. Yeah. Let's see here. Unless it's an all-female cruise. And then you know what age you're in now. I'll just be like, hey, I'm a woman. I'm allowed on. Hilarious.
It's going to go up, down, or sideways.
Yeah, I mean, you got United Airlines up 4%. What's up with the airlines, man? What's up with the airlines? We got some airlines up. Hucking bonds 2 days in a row, right? Treasuries are up. And of course, commodities just get these freaking futures are just continuing to get wrecked, man. Wheat, corn, and rice just hurting. Good Lord. Everything's getting wrecked. Yeah, it just looks like, airlines, man. Airlines got some banking up a little bit. Nothing popping out. You know what, though? Let's check back in on these Forex pairs. Yeah, I told you too, man. I'm telling you, the dollar is finding some strength. Now, people will be like, well, wait a minute. You're talking about Dixie, and you're looking at Dixie, and you're trying to see is Dixie strong or weak, but then you're just looking at like a Euro-USD pair when you're trying to see, you know, what's the correlation between Bitcoin and Dixie or SPY and Dixie and la, la, la. You don't understand. I'm looking at these pairs to see, is the dollar flashing some strength against these other countries' currencies, right? I'm not saying it's like this pair has got nothing to do with the actual data set of Dixie USD, right? The Dixie data set. Is it showing strength? Yes, it's starting to show some strength after literally getting its ass beat up, right? The euro, the pound, the Aussie dollar. I mean, everything was just kicking the dollar's ass, and for months. Well, the dollar's starting to rebound. Dollar's starting to rebound. Let me show you something here. Let's go over here. Bing, bing, 5 day. Yeah, I mean, looky. I mean, here's where all the bull divs started. From when you were, here's the bold goal run on the 5 day, doing exactly what Bitcoin did on the way to 20K that time, right? And I guarantee you, you go up, you pull an RSI up. Let's see what the RSI was doing here on the 5 day. But look, you're outside the power mean band, returns mean revert, price action follows. Outside the power mean band, returns mean revert, price action follows. Right back to the power mean band. Again. But now it's dipped down. Finally come down to test the reverse wave trend. Dip below it. Got outside the power mean to the bottom side. Look, 2 5-day candles. Pop, right back to the reverse wave trend. Tried to get up to the top side. Wasn't having anything to do with it. Finding support on the reverse fissure. Now, is the dollar going up to the 5 day? 103.7, 103.63. That's where the reverse wave trend is on the 5 day. Mark my words. Now, it did it back over here. Now, right here, I remember too, I was like, okay, dollar's going to go up, test top side of the power mean band. If not the 33. Look what happened though. Right where it's flipping bearish, right? You only got up to this length of the power mean and it rejected. Look at it now. Do you see the big difference? See the difference? Here's the 33 up at the top. You close a 5 day candle above this reverse wave trend, this dollar is going to run back up probably 106.5, 107 area, in between 106, 107. You're going to see traditional markets. You're going to see SPY. You're going to see all the minis. Everything's going to dump like crazy. If the dollar shows that kind of strength, you're going to see some massive dumps. Now, whether or not that's going to work all the way into crypto, because the Bitcoin will correlate with the dollar way more than traditional assets will. I've seen that in the past too. So it's going to be interesting to see what happens. Because what I would really love to see, Bitcoin run with the dollar, right? Because look, Bitcoin's strong. Bitcoin's the only sound money in my opinion. People argue that. They can. That's fine. It's just my opinion. I think it's the only real sound money out there. Right? You can try. I mean, guys, we know what Bitcoin is. That's all you got to know. We know what it is. There is a supply cap. It's the most secure blockchain in the world. And I love it. So when they started creating these ordinals on BTC, everybody was used to like Ethereum and Solana and Avalanche, all these other all the NFTs that are on those chains, instant transactions. Then they start to send ordinals around, and they haven't. I was so shocked how many people don't even own any Bitcoin. They got dragged into the shitcoin space, and they don't see the value of taking profits and just loading up on Bitcoin, stacking sats, stacking sats, stacking sats. So these people start sending Bitcoin transactions, and they use the lowest transaction fee possible. Look, those miners are going to take that, they're going to stick it under the low fee line, and they're going to get to it within the week, probably. There's people still waiting on transactions that have been going for a week now because they're cheap. And they think that it's going to be fast. Nah, these Bitcoin miners, yeah, man, they're going to shelf that shit in a heartbeat. They're going to deal with everybody else, right? So people are like, oh, this blockchain sucks. They don't even know what Bitcoin is. It's a shame, man. It's a shame. A lot of these young traders, investors that came in, they're really is what they are. They're just degens. A lot of them come in. They want to trade all the shit coins, flip NFTs. NFTs are collectibles. Here's the problem, though. Here's what's happened with most NFTs. It's moved away from just being collectibles to where now all the shit coiners came over and started just launching NFT projects as literal shit coins. There's nothing in the future. There's no utility. They're just pump and dumps. And they're flipping NFTs, which is stupid. As collectibles, there's only a couple of legit projects. They're not Ponzi's. They're building in the entertainment space, right? They're real collectibles. But all these people that came over in the NFTs to do that, they literally ruined the NFT space. Literally ruined it. Everybody that's been in it for a while knows that. The space is absolutely ruined by these degens just flipping. They destroy projects, right? You can't stop them from pumping and dumping a project, and that's what they're doing, man. It's crazy. It's crazy. Indeed. Just had to say that. Get off my damn chest. So the 5-day. Let me see where the 3-day is on this. I'm done ranting. Yeah, look,
it's a good point, though, because you know what? In traditional assets, you also have similar schemes, right? Where you have people rushing in, chasing fool's gold, basically, by chasing things that are not the main thing of a niche or a sector. And they're trying to make bank off derivatives that are like low liquidity side asset. And rather than taking their profits and moving them into the actual key underlying asset of the whole niche, they try to like make bank on like things that basically don't have much of a future, if any at all. Right. And you have the same exact thing happening in crypto. It's no different. and all I have to say about that is, on the one hand, competition is good because it lets you parse out a lot of good ideas and lets you develop good ideas and lets you develop smarter, better, faster products, whatever. And that's good. And it also provides liquidity to the overall market, because if you look at where Bitcoin was when it started, it was moving nicely, but when you added more coins, it obviously grew the interest, and so you had more liquidity. But even so, there's the argument: would Bitcoin be at a higher price or a lower price if there wasn't other coins? It's kind of moot, because would the market have grown to the size it was if there hadn't been any other coins? Arguably, no, because you wouldn't have had all the development of all the other coins that have found a way to make interesting, better projects. But 99% of the projects are absolute garbage, and they will be sussed out. They will be flushed away, and they will be eventually things people don't even remember ever existed. And you'll have the 1% that are left that are, the good projects. And it's very much, it goes to it's the same thing as we have in the regular markets. In traditional markets, we have all kinds of garbage assets people trade day in and day out, and you have derivative assets, and you have all these silly things that people trade. But if you don't take your profits out of them, you're hanging on to things that are eventually going to come and, help you get wrecked.
Yeah.
So always know what the key underlying asset is of whatever sector you're in, whether that's Bitcoin and crypto, or whether that's something else in another sector. Don't get stuck holding bags of garbage just because you made nice on one trade. Convert it into an asset you actually want to hold.
Yeah.
Not financial advice.
Yes, sir. So the first thing I'm noticing here too, look on the 5-day on the dollar, starting to have an outlier, right? We talked about outliers earlier, and that's when the white variance line turns pink. That's when you're having a statistical outlier. Now, how do I know that for a fact? Well, look where the outlier started on the bounce off of the fissure here. Didn't quite get down to it, but look, the algos are going to front run these areas, and that's exactly what happened. So now you can take the projection boss. Oh, that's right. I changed it up. Hold on here. Whoop, that was PB1. Hold on. First, let me get this set back up on. Oh, it is on Laplace. That thing revert on.
2 hours later.
Let me see here. How'd I change that sucker? No, it's back on Laplace. That's what I'm talking about. So you can take your little distribution here. You can move it right to where that, whoops, one too many, right to where the outlier started. Oh, God, this is perfect. I'm glad I pulled this up. Let's turn off the power means. So look where what does an outlier tell you? That a 95.4% move, a fat tail event. Look, here's the 90 on the current candle, the 95 for Laplace, 103.75. So do I think this is heading there? Absolutely. It's literally telling you. Then you pull back. So let me turn that back on and look where the 95 for Laplace is. Right at the reverse wave trend, 103.6 area. Now look at the 3-day. First, let me show you something. Same thing. Outlier on the 3-day. Got the projection started where that outlier. Boom, look. 95.4 right up there. So do I think 103.6 area is getting hit? Yeah, I do. Yeah, I do. And it's on its way, man. It's slowly walking its ass right up there. We got let's see, we've got the low length and the 981 volatility expanding positively correlated. 981's contracting a little bit positive. That's why we're seeing these little wicks. I think these bulls are going to overrun this, though. Let me look on the 2-day. I didn't even check. Let me see. And this, mind you, this is all coming off bull div. On the 5-day, the 3-day. Here's the 2-day. When the outliers start, right there, right where I have it. Look, it still hasn't fully reached. Look, so 2-day. We hit the 2-day 99 log MA and tested the 2-day wave trend. So seeing this now, hey man, if this thing wants to pull back now, the 2-day tested it, right? Doesn't have to. But from what I'm seeing on those outliers, 3-day and 5-day, we're going to hit that 103.6 area here, maybe by the end of the week for sure. I mean, we're close now. It's only about 0.6 of a point. You see here. And we haven't hit that 95.4 yet, right? It's telling you there's still a fat tail event. I wouldn't be a bit surprised to get a wick up here. And look where it is on the 2-day, the 103.6 area. Sounds like a radio station, doesn't it? Go back to the daily. Let's see. It had the outlier back here, right? Had the outlier back there. It's already hit. And now you're on the top of the power mean band. Let me turn off this PB. Work done. Just wanted to show you what that outlier means. Now, look on the daily. Dollar, it's outside. Look, you bounced perfectly. You came back, tested the wave trend. You literally closed a daily candle above the reverse fissure. This pullback was a no-brainer. Comes back, sends a wick to the dollar to the reverse wave trend. This is a reverse wave trend. Look, you were to the downside here, whoop, right to the reverse wave trend, right back down below. Look at this daily candle, right back up, tested wave trend. All right, pulled back, had a little bit of a down move, then launched, closed above. Now you're seeing it again. Back outside reverse wave trend. This is all happening. I see the dollar probably staying above this wave trend until this on the daily, until this power mean band flips. Look at the log MAs. They're telling you a lot right there. The 99 is starting to flip up. If this turns totally bullish, you keep getting tests of this wave trend, look out, man. Look out. This dollar could be running again. We could see another bull run on this dollar. There's no doubt about it. Even though we know, living here, this thing is a worthless piece of... And popping off of what? Hidden bull div. Popping right back, finding support on top of the fissure. That shows a lot of bull strength right there, man, to do that. To bounce off the top of the wave trend when it's above the power mean band. Winner return is going to mean revert. Win. Could be a minute up here on the daily time frame. This is going to flip a lot quicker than it is up on the more macro, the 5-day, 3-day. See here. We are crossing the zero mean right now. We're getting a nice candle too. If this thing was positively correlated, you'd be seeing a big move. This thing would be rocket shipping right now. Look at the trend starting. Right? The predictor model flipped right here. It's been up ever since. Entropy percentile. Right, still rolling the predictors to the top side, and we are trending. We are trending. All this randomness. When you see bright blue, you're in trend. That's why most of the time, the markets are in a random walk. Now, this is a daily. You go up on a weekly, a lot different. But just like volatility, look at all the noise. This is what you want. This is what happens. Volatility expands and contracts. Look at all the breaks in correlation. This is the key to it, right? If this is the lock, this is the key. And then you got entropy doing the same thing. Entropy goes into trend, right back into a random walk. Trend, random walk, trend, random walk, trend, random walk. Nothing's lagging, giving you real-time information of what the market's doing. And even more, it's giving you real-time information of what the high-frequency trading firm algorithms are doing. That's the code we've been trying to crack for years, right? And is what we are really trying to do. We're trying to take all this information that you see on all these charts. We're trying to take all this information and create a standalone indicator. It's tough because number one, that standalone indicator is going to be, you think this is all, take all this noise and throw it into one indicator. Right? Speaks for itself. So we're trying to simplify it somehow. We'll see how that goes. In the meantime, we've got it all broken down, right? We've got all the bases covered here. Every base covered. That's what the VEPS do. That's what the VEPS do. And hey, if you're watching on TradingView right now, yeah, good question. Why is Litecoin up? Let's take a peek. All right, we all know Litecoin. Litecoin's what? Litecoin's pretty much test net for Bitcoin. Let's go over here on the crypto. I've been noticing that too, man. I'm glad you brought that up because I don't follow Litecoin too much, but I did see that baby was rising slowly. Where are you, Litecoin? What the hell? Where are you, little shit? I know you're on. There it is. No. Litecoin, where are you, baby? There it is. Jeez, I knew I had it. Yeah, up 2% again today. Well, let's check it out. Well, you had a bunch of bull div building. Look, you just tested the fissure. This party's about over. This party's about over. Now, why do I say that? When you get a fissure on the top side of the power mean band, that's a cap. Dixie is just saying screw you and your cap, right? It bounced off the top side. That's why before Dixie makes the ultimate move, I think, where this thing's going to run up probably 106 or something, probably going to get another pullback on Dixie, which will give a little relief to the markets. But yeah, this is usually a cap on price action, right? You're going to go up to that reverse fissure. You're going to reject. Most times you're going to be outside the power mean band. So you're going to come back down, test the wave trend again. If not, all the way to the downside of the power mean band. So let me see up here on let's go on a weekly on Litecoin. Yeah, man, there you go right there. Okay. No? Wow, man. This little pop, huh? Was it hidden? No. Wow. This is divergence free, baby. Div free moves. Gotta love that. That's when both sides are, let's go at it. The bulls are just overrunning them right now. This is what divergence is. Divergence in the first place is the imbalance in the buy and sell pressure, right? The imbalance between what though? Returns and price action. That's the divergence you're looking for. If price action was following price, which makes 0 sense, right? You'd be using an RSI efficiently. But the RSI is built on the strength of that price, right? So why do people use it for divergence? Why did I use it for divergence as little as 5-6 years ago? Because that's what I was taught. That's what the echo chamber was telling me that I should be using. We broke away from that really quick when we were like, look, this is a worthless piece of trash. Why are they teaching people div with this indicator? Then somebody popped up, already had a returns oscillator. I immediately saw it and I was like, bingo, there it is. And then you start matching up the RSI with the returns oscillator and you're just like, what the hell? Why is nobody talking about this? They don't want you to talk about it, man. They don't want you to talk about it. So there's no div on the weekly. The 5-day, there wasn't either. 3 days having an outlier. We just talked about outliers. Was that coming off bull div? Absolutely it was. When did the move really start? Right. The returns fully mean reverted to the 0 mean. Right when they started moving to the top side, that's when you got the price action move. It's positively correlated right now. Look at all the fissures. The Fisher transform indicator right here. They're all up. Total random walk. There hasn't been trend in Litecoin right back here, top side, like couple 3-day candles, right? Back here, trend to the top side. I don't even, that's the thing. I can turn the price action off. Do this with traditional TA. Turn the price action off. Don't even look at price action. Start setting up verticals on moves and tell me, this was a bullish move. This was a bearish move. Guys, I could do it with one indicator, the variance. I could turn this price action off. I could tell you what every freaking move is going on in price action. I can throw verticals on a ghost chart just using variance, and they will match up perfectly on the moves. This is what you can't do with traditional TA. We do it all the time, especially on div plays, right? Especially on div plays. So, but look, this is what happens though. So you're getting a higher high on the returns oscillator right now from this data set. There's not a top yet, but it's setting up hidden bear divergence. That's when you get a higher high on the returns oscillator, lower high on the data set. And what is hidden bear div? It's a continuation divergence, saying if this data set tops out and you start to get a 3-day move to the downside, it's going to be a continuation divergence, a continuation of this down move, right? And most of the times they exceed it. They go deeper, right? But what does that do? That'll send this returns oscillator down for a bounce on the zero mean with more bull div. It's divergence moves these markets. This is what a lot of people don't understand. When there's an imbalance in the buy and sell pressure, right? That's usually when there's either continuation divergence or regular divergence. That will continue. That's what moves the markets. You can see it on the 1 minute time frame. You can see it on the 3-day time frame. You can see it on a weekly, on a 4-hour. Divergence moves these markets. That's what's going on. And it's these big algorithms that are creating it. They're the ones that are creating. Do you think retail traders are creating these imbalances and buy and sell pressure when all they do is sit around and market in and market out of positions? That's another thing, man, that we teach. Most retail traders don't even know what a limit order is, let alone how to use one, or let alone how to find a good entry to use one, right? So that's what we like to point out. Stop marketing into positions. This is all about being the maker, not the taker. That goes in all aspects in life, if you know what I mean, with the woke shit we got going on these days. No kidding. I'll jump off that train real fast. Let's see here. But anyway, so on the returns oscillator, we're on the 3-day. You weren't yet, right? Or no, that 3-day hadn't turned down, or did it? No, 3 hasn't turned down. So the 2-day though, look, we don't have a new 2-day candle. We're gonna get one 24, about 33 hours. We're gonna get a new 2-day candle. That 2-day candle starts to turn to the downside. You got a top on the returns oscillator. Actually, what am I even talking about? Hold on. 2-day is not setting it up. We got a higher high here on the data set. This 2-day candle would have to pull back and be. The only thing you're going to get out of this is weak bear. Sorry. I got so brainwashed by the 3-day and the 5-day and the weekly that, yeah. Nah, man, this blew the div out of the water. Wow. I'll tell you what, man, if this thing rolls uphill, this is even making me more bullish on crypto. Because Litecoin is a good coin to watch. I mean, it is a test net for Bitcoin. You see here. Damn. This thing could be getting ready to break out, man. Now, this is just all part of the workflow, right? I'm not trading these high time frames. Yeah, man. Even on the daily. So look at the data set over here, right? High. You got a high, or actually, there was the high. So yeah, from way back there, there's hidden setting up. There's a lot has happened in between there. And if you're never for sure, this is a little trick a lot of people don't realize too. When you're looking at this divergence over a long period of time, all you got to do is take your measuring tool. Start right here on the data set and move back to the top of the returns oscillator. Where was that? 29 bars. Go to the settings in your returns oscillator. Oh, and you got to add one, right? Because it never counts the first bar. So 30. I'm going to change my length from 7 to a 30 because I want to see if that hidden bear div is in effect still. Yes, it is, but there's no top. All right, you change it to a 30. There's still no top. Damn, man, this looks bullish. I'm not going to lie. This looks real bullish. I'll tell you what, man, if this data set breaks the top up here back over $100, I mean, that's another 10-point move. That's what's going to happen for this hidden, right? You're getting a higher high on the oscillator right now. If you see daily candles start to turn back around, yeah, man, this thing could start to move back down to the downside just on that long-term time frame, right? Little div play there. But that's what you want to do. I see all these fissures up too. DLP starting to build to the top side. The predictor is starting to drop back, starting to head to trend. Let me see here. You got the 981 falling off a cliff right now, negatively correlated. You've got the 2400 going sideways, negative, starting to slope negative. The 981 is definitely contracting, positively correlated. That's why we're getting this pullback on the daily, for sure. And that's another thing with these indicators. You can turn the data sets off. It's the same thing like with the volatility. You can literally look at current candle volatility reads and give a description of what the candle will look like. That's the power of these indicators. That tells you right there, whoa, these things aren't lagging at all. No, it's real-time info, man. Volatility itself is creating everything. Literally, it is the base. It is the base. That's why people out there trading candle patterns, bad idea. When volatility is the one creating it, look at all the breaks and correlation. How the hell are you trading candle patterns with breaks and correlation and volatility like this? That's why patterns break all the time and don't work out for people. Same reason why support and resistances on data sets break all the time for people. It's the volatility. That's all that matters, man. It's all that matters. Even look at this slow contraction of volatility on the daily on Litecoin. Look at all the breaks in correlation, right? Positive, negative, positive, negative. Look at the data sets when the correlation breaks. If you read about the tendencies and volatility, you'll look at something like this and go, damn. It's like, damn is right. Let's see this 4 hour. Nice little run. But what's it doing, man? This is leading me to believe, that hidden at some point is going to play out. Why? Look at the daily. It's been doing nothing but setting up bear div. You're below the zero mean. This thing has not been correlated to price action. Look, you got a little bit here, but yeah, there's no correlation right now. A little bit of negative correlation. So when's this going to play out? You got 3 of the 4 fissures down, heading back into a random walk, although it's still trending to the top side. Volatility, you're going to see a mixed bag of reads. That's why you're getting these dojis. The low length contracting negative. 981 expanding negative. 2400 is it's expanding a little negative too, although it's kind of flat. It's flat negative. 981 expanding negative. 525 contracting negative. All different reads. And there you go. Doji Central. If I were to turn that price action off and just saw that, that's exactly what I told you the candle is going to be. Doji. You will be able to, once you be able to read this indicator correctly, you'll be able to say, you'll literally, because everybody's traded traditional TA, the names of all these candles. Most people do, especially if you're watching this stream right now, you're a trader probably. And you've definitely went through the mill on traditional TA, and you should know what all the candles mean. But the problem is most people don't know what's creating the candles. People will say, well, volume. What do you think creates volume? Volatility. Without volatility, you don't have shit. The market's going to go sideways forever, right? Take volatility out of the markets, what's going to happen? There's not going to be any volume. There's not going to be any candles to analyze. Let me see. 11:13. Yeah, we ran it over. But yeah, that's pretty much why Litecoin. Let me see here too. Were we popping on hidden divs? Not really, man. Not on the 4 hour. But you saw all that bull div up here. That's why Litecoin popped. That's why Litecoin was popped. Plus, Bitcoin's been fairly bullish, right? Bitcoin's been fairly bullish. And they run in a pair for sure. Something good to trade. But yeah, it's up 2% today. Hey, man. People taking some BTC profits, slamming it in Litecoin. Let me see. Look at the shorts up 16%. Oh, some people never learn. Anything in crypto really moving hard? Just Litecoin. Hell, Litecoin's up 2.66, huh? Good stuff. Bonk, you shit coin. That's Solana's meme coin. Yeah, let's wrap this up, man. We've been going. We're overtime. We're overtime right now. Time flies when you're having fun trading the VEPS. Let me go back over on the VRE real quick. Let's pop this. Let's see everybody. Yeah, look at the micro crude, man. Things all over the place right now. Yeah, I've been watching that in oil too. Similar, right? It's in all this volatility, man. It's in all this volatility. And gold, like I said, man, gold. You guys, all you Peter Schiffs of the world, I don't understand. But I've been talking about the dump. Was talking about it. I looked at the chart yesterday and I just kind of smiled, right? Not because I have a crystal ball, because we have the VEPS. And they're not lagging indicators. It's going to show you real time. And all the divergence was setting up. Really was. Gold down. Well, gold, Bitcoin should dump with gold. No, it doesn't have to, man. Doesn't have to. People are getting wise to gold, man. It's just gold fever, right? But how many of those people are really holding the underlying? How many people really are holding that? Holding the physical gold? Not a lot. Hard to find it, actually. I mean, I was in a great spot out in Carson City. You can get as much gold or silver as you want. They got vaults full of it. Vaults full of it. But you realize, and I used to trade silver. Last time I bought silver was at 12 bucks, sold at 18. Bought 5 cases, right? 5 cases. It's a lot of silver, man. Each case weighs 36 pounds. If you've ever carried a small, I mean, it's tiny too. About like that wide, about that thick, right? 36 pounds. I'm sitting there carrying 5 of them. It's hard as hell to carry 5 little boxes that weigh what? Oh, almost 200 pounds. It's insanity, man. That's why. That's the only way I'll trade heavy metals, if I get my hands on the physical underlying. Can't do that anymore. So it's fine. I'm not interested in trading heavy metals. Not at all. Plus, Michael Saylor made a good point in that video talking about it. Like, go try to take, like, put $100,000 in your walk-on carry bag at the airport. See what happens. Put a kilo bar of gold in your carry-on. Try to take it through through TSA. It's going to get confiscated. They're going to take your gold. They're going to take your money, and you're going to be under suspicion of stealing it immediately. No longer are you innocent until proven guilty in this country. You're guilty immediately. It's a sad situation we're in over here. Sad situation. Gee, I'm going to end on that little rant, I think. But all these data sets are doing exactly what we were talking about at the beginning of the week, man. Yep. Solana's looking bad too. I'm going to be honest. It's underneath this tight weekly. Bitcoin's underneath its weekly, tight daily. I mean, I see crypto having a flush here. I really do. Really do. Let me look at something real quick. Because I talked about this the other day. Where I like the weekly test of the wave trend. Let's see. Let me turn on UPM. Show you what I'm talking about.
It's going to go up, down, or sideways.
All right. There was the low, what, 25, like 25.8 or whatever. Here's the weekly wave trend, right? It's down here about 25.5, 25.571. Here's the 5-day. Here's the 5-day. Little under 25K. Think that wrecks somebody? Yeah. Right. Is this some data set support? No. People are drawing lines on, or looking at data sets for support. It's way down. It's down here by the 33. Is that the 33? Yeah, 33 log MA. Yeah, we're talking reverse wave trend. There's no data sets there. And that is under 25. On Bitfinex, still got 92,372 Bitcoins longed. Jesus Christ. There's only 1,623 shorted. Little imbalance there. But guys, we had this big pullback. Hardly any longs got liquidated. It's insane, man. Which leads me to believe over on Bitfinex, not a lot of leverage being used. I'll tell you what, if this thing pulls back 25, let me see something here real quick. 3-day, was that 25.3? Yeah, I'm telling you, man. I'm telling you. Bitcoin, I don't think seen the bottom yet. This thing could definitely drop to 25. Definitely could. I want to see what it does when you do get back to that area. That'll be interesting to see. That will be interesting to see. But we all know how Bitcoin does it. Wouldn't be shocked at all. Let me see where this is at on the daily real quick. Especially when we got the Fisher and the 99 down here on the daily. You're outside the power mean band. But look at this power mean band, man. This thing is flipping bearish. This is flipping bearish. Don't think the same thing can't happen to the downside. You're just going to be, you're in total, this is what the reverse Fisher's for, right? When it's below, it's a nice support. When it's above, it's like a cap. This is how this works. And we've already got a couple wicks into it. This is shaping up interesting for sure, because look at the volatility on the daily on Bitcoin. The most volatile asset known to man. What do you think's about to happen? We're about to get one hell of a move. One hell of a move. Now, if I were to go probability wise and I'm looking at the Fisher and the 99 down here, which way do I think that's going to go? Probably top side. All right, we got the reverse wave trend up here, 27.7. That's about 1K above where we're at right now. Top side of the power mean band, 20 back up above 29. As you can see, every time it's got up here, right, it got outside the power mean band, wave trend. Back to the top side, sending wicks into the top side of the power mean band. Whoop, wave trend. Back outside top side of the power mean band. This daily candle literally closed below wave trend. That was a shot across the bow. Now look at this clear out. What do you think that daily candle did? Look at that doji. That thing cleared them out to the top and the bottom and then ran it down to the Fisher. Bounced there. Where? Wave trend. Now you're back down to Fisher almost. Something's got to give. Something's got to give. There's nothing down here. I'm not saying this data set can't come down here, but when the reversal happens, it's going to be swift and it's going to wreck people. This is why. This is all part of a workflow to trade down here. Intraday, right? You're putting money. If you're trading on these crypto exchanges, you're not going to find any links on our YouTube. You're not going to find you're not going to find any links to exchanges in our Discord. Look, we don't on-ramp people onto this shit show. You want to go trade crypto? You're on your own, man. You want to use these exchanges? I can tell you one thing right now. I don't trust them at all. I do not trust these scammers. If you're going to trade, this is another reason to trade intraday. You wake up in the morning, you send crypto onto the exchange. But no, as soon as you do that, not your keys, not your crypto. That crypto's exchange. That's why when these exchanges go under, all these people lose all this money. It's literally not yours, just like traditional banking. As soon as you make that deposit, that money's no longer yours.
Get out of my way.
You're literally loaning that financial institution that money to invest in equities and stuff. And people just never read the fine print. Who does? Who does read fine print? Most people find out the hard way. There's a reason why there's a limit on ATMs. And like I've told this story before, I tried to go get $250,000 off a real estate sale. Bank was straight up not going to give it to me and my mother. I was in there raising a little bit of hell. Had to set up a meeting with the bank manager and prove literally I had to. So I was like, all right, let's tell them we're going to buy gold. Right. So I went to the gold and silver shop and I was like, look, this is what I want to do. Can you like write some a note? Yeah, this guy's been in here. He's speculating on gold, blah, 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 blah. Then he released the money to us because he thought we were going to go buy gold. It's not your money, man. So when you're intraday trading, you send your money onto the crypto exchange. When you close out your trades for the day, you slam that shit right back in your hardware wallet. That's all you got to do. That's all you got to do. Get your money off the exchanges. Because you can't trust them. And you know which ones you really can't trust? You ever met that person out there in the world and they go out of their way to tell you, hey, I'm an honest person. Hey, your info's safe with me. Hey, I'm honest. Hey, I'm honest. If somebody's out there going out of their way to tell you that your funds are safe on their exchange, they are scamming, man. Look out. You think your money's safe on that Binance exchange? Woo! Good luck. Good luck. They've always sketched me out. You shouldn't have to tell people your money's safe. You should be proving it, right? But last week, they halted Bitcoin withdrawals. What does that tell me? What started happening with FTX? They started withholding Bitcoin withdrawals, right? Why? Because they didn't hold the underlying. That's why. Every time they got orders in, they would let those stack up, and then they would be market buying. They'd be buying they would be buying Bitcoin on the market to fill the orders. They don't have the underlying. This is the same with traditional finance. You think these banks have all this money? Michael Saylor gave a good. So you take your $100. Let's say you take your $100 into the bank. That bank takes that $100, loans that same $100 to 5 different people, right? Then you come back in for your $100, it's gone. I mean, it's just nuts. It's really nuts the way banking works, and we just deal with it, right? Well, I need somewhere to put my cash. It's like, well, yeah, you could be sticking it in Bitcoin. You could become your own bank, right? That's what a lot of us do. If I need money to put in my bank, I sell a little Bitcoin. I put the cash in. I buy what I was going to buy. I pay the bills I was going to pay a bill. You know what my balance in my bank account is right now? I think it's like $500 or something. Guys, I don't keep money in the bank either. If I deposit money in the bank, it's immediately I'm writing checks. I'm freaking buying things. I'm paying bills. And it just gets taken right back out. I don't trust banks as much as I don't trust these crypto exchanges. Do with that information with what you will. That's how I feel about all this. And all that being said, we're going to get back at this tomorrow morning, 9 a.m. Eastern Standard Time. Thursday, right? Thursday trading day. Going to be interesting. I'm really watching gold because I think gold's really going to dump out. So yeah, guys, we appreciate your support in the Discord. If you're watching this for Trading View in the first time, you can see the link to our Discord. Come on in. It's free to enter. We have a free volatility trading. It's called the Volatility Starting Pack. You can get that free for the rest of your life as long as you're in the Discord anyway. And then we have a 2-week free trial with all the indicators you see here. The way we like to tell people to do it, first come in, get the free starter pack, listen to some streams for a couple weeks. Get some of the lingo down about the distribution, about the returns, about entropy, all this. So then when you get the 2-week free trial, you got a little head start. You can actually work with the indicators and instead of getting the free 2-week trial immediately and start trying to figure out all the lingo. So I would do it that way. And how many people out there are literally telling you, look, don't come in and buy our stuff? And that's what we do. We don't want you to come in immediately and buy these indicators. That's not why we started this. We're all traders. Would it be nice to be able to pay these developers money? Yeah, it would be at some point. You guys don't understand. We're doing this for free right now, right? We've been doing this for free for years because this is our passion, to save retail traders from this, to save professional traders that have got worked by these markets, probably because they've been misled with leverage most of the times, especially in options, not learning risk. These guys are buying 10 lots of fucking Google. That is just insanity. If you think about it, you can't, it's I don't care how you trade, it's all about risk. And that's what a workflow is about. When do I use my risk? When do I take risk off? It's that simple. With all that being said, wherever you live out on this big, beautiful blue marble, have a wonderful rest of your morning, afternoon, or evening. We'll see you tomorrow. Later, guys.